Start recording. I'm going to share my screen. All right. Who wants to go first? Gaines Gremlin, your server mute is removed.
Thank you.
Whoa.
Can you hear me?
I can hear you, but it's pretty bad. It sounds like you're gargling while you're talking. He's typing.
Hey, I have a question.
Okay.
So I found that I guess my preferred style of trading would be scalping or short day trades. And right now I'm using the EMA to confirm an entry for a trade. It would What are your opinions on that? I use like the 10-day EMA or the 10 EMA and the MACD and RSI.
So what I've heard people using are like the 20, the 50, and the 200, or the 20 and the 200, or the 50 and the 200. I think the 10 days is a little too short because what you want to see is a longer range average in your short time frame. So like let's say for example you're using a 5-day 15-minute chart, you want that longer EMA in there so that when it does come down to the level you're looking for, it's more confirmation. Whereas a 10-day EMA, it's totally going to come down there a lot sooner than that, say the 200 for example, or the 50. Does that make sense?
Yeah, so using a longer period EMA would give me more of a solid confirmation to enter the direction of the or ride that price action up.
Yeah, I would say so. I mean, anytime you do something that's a lot shorter in time, your confirmation is going to be, it's not going to be as strong of a confirmation, right? Or that entry point or exit point, whatever it is you're doing, it's weaker, right? And I use the same concept with when I'm doing support and resistance, right? When I look at support and resistance in a 5-day period, I'm only finding the 5-day worth. But if I go to 180 days out, then I can see extremely strong levels, right? Super strong support, super strong resistance, and that 5-day period that I was looking at before, it may be far away from that, and there may not even be any support or resistance in that 5-day period based off of the longer time frame, if that makes sense. So like I could month trade, or rather, I typically month trade with the 6-month chart because when I see something hit those solid levels in a 6-month chart, then I know I'm in a good spot when I want to trade a 30-day share swing, for example, right? So, like let's say I'm getting into a support level, and on the 180-day, it's super strong. So actually, let me pull something up here on the chart and see if I can give you an actual example. Let's go with that one. So, here's the 180, right? And if I find something at, say, if I'm looking at a 5-day 15-minute or a 30-day 1-hour chart and the price is at $36, well, you know, I may not know that's a super strong support level, but when I go back 180 days and then I see it over here bouncing off of that level, then I know, okay, this one, when the price is down here, I bet this is going to bounce. I would put my money on it, and that's essentially what you're doing when you're trading or investing in the stock market is you're putting your money on something that you think is going to, go in a certain direction, right? But if I'm in, like, say, the 5-day 15-minute, well, support here is at $42. So if the price comes back down to $42 and I try to trade off of that, there's a good chance that it's going to keep blowing through that $42 mark. But again, if I got to the 30, see, now $37 is a strong support, right? But, or you can even argue that, 39 or $40 area is a strong support. But again, this area, if I go to 180 days out,
tényleg a live there,
you know that
the option mo.
that's a
Yeah.
that's a really weak area, right? So um, I don't personally like doing short-term stuff as far as the time frames, but if you can still trade the short-term trades, but if you give yourself additional time as far as analysis, then you're going to get more confirmation on that level. Does that make sense?
Yes, that makes a lot of sense. So the longer period EMA will give you a sense of the stronger support and resistance.
Absolutely. And again, same thing with moving averages. Um, the moving average isn't the same thing as support and resistance. It's a different type of analysis, but the concept is the same. The more time you give yourself to analyze something, the better that indicator, quote unquote, indicator is going to help you.
Okay, thank you.
You're welcome.
I have a quick question along the same lines, if you don't
Okay,
mind.
sure.
So I was watching a video on one of these investing guys. I forgot who it was, but he mentioned how pre-market graphs, if you like find a trend in the pre-market, and you can use it to open up really early, like when the market right opens, like at 9:30. Do you think that's like usable with options, or is that more for like regular stocks?
Um, well, pre-market stuff can be a trap, right? Because I mean, that's essentially like day trading, right? Like what you're referencing is something that's, at 9 a.m. and there's a 30-minute time frame there, or 8 a.m., whatever the time frame that your broker allows you. Um, that's what you're referencing, correct?
Yeah, yeah. So like if you were to watch the trends in the pre-market before 9:30, and you would.
Right. Okay. So what I would say is you can be in a trap, right? So there's a particular guy out there, I forget his name, but he uses what's called a 3-bar play, and he looks at pre-market stuff, right? So let me see if I can find an example here. Um, so let's say, for example, right here, this one is uh, potentially something you're referencing, right? So let me just draw a circle to identify it. This particular portion here. So when you see something break above resistance, right? So this is previous resistance here um, from the previous day. I mean, even market close, and then after hours, and then pre-market, it does a rip, right? And then falls. You could potentially be like, all right, well, since it broke over resistance and then held at the resistance level, it might pump when the market opens, right? That's a certain, and again, here, this is basically the same thing, but the opposite direction, right? So it pumped over resistance, fell. So, again, if I use that same analysis I did here, I'd be getting it wrong, right? So, there, pre-market is tricky because it's only shares and it's only people willing to pay a specific price in shares or sell, right? You can't market open entry or market exit a position with shares during the pre-market and after hours trading, right? So that's the other caveat here, is the fact that you know there's a lot of specifics into it, and if you try to base your trading and analysis off of just one small time frame, it's very likely you're going to get caught in a trap, right? And back to the 3-bar play, it's like um, it's like the engulfing candle, but it's 3 bars, so it completely engulfs something. So I'll use this particular section right here as an example. So this whole entire red section is engulfed by 3 bars, right? So what this means is the next bar, when it opens, you get in, and then it's gonna do a quick movement, and you're gonna get out, right? That's quick, fast scalping, right? It doesn't always work. I've seen this like when I was not as seasoned as I am. I paid for this person's service. I watched him trade his 3 bar play. I'd say he was pretty successful for the most part, but there's some times when he got caught in a trap and it went against him and he had to stop out, right? And he would lose, 15% off of what he put in. And this guy traded $50,000 to $100,000 at a time, right? So, he's losing 10 or 15,000 bucks, and his gains are 10 to 15%. So he goes in equal direction, or equal amounts in both directions. So, if he's a 50-50 trader, he's breaking even. If he's a 60-40 trader, he's made a little bit, right? But I guess the point I'm trying to make here is pre-market and after hours trading or extended hours, the graph and everything, it's very tricky. The time frame is very small, and you can get caught in big traps. But there is a method to the madness, and if you can find that method, it could work, right? And that's why I think this guy's 3 bar play is potentially a good idea, but there's still a lot of risk, and you got to know what you're looking for, like really seriously know. And if you're really good at it, then options would pay out even further. But I watched them doing this, and the win to loss ratio isn't enough for me to attack that type of strategy, right? I think he gets most of his money from premium payers, to be honest with you, because they offer courses and stuff, and they charge $2,000-3,000, and that's where he gets his money. And his ideas are good, but implementing the ideas are something totally different. And you know, it's just a dangerous game to play in such a short period of time. I personally like longer time frames for analysis. Even if you're doing day trading, a longer time frame analysis um, is more consistent with getting it right. It might take a little bit longer to find what you're looking for. I mean, you could probably, I'd say the shortest time frame you should really be looking at is a 5-day, 15-minute if you're scalping. So hopefully that answers your question.
Thank you so much.
You're welcome. Gaines Gremlin, did you ever get your mic working? Okay, so he said he keeps seeing professional traders say a maxim something like be quick to cut your losses, be patient with your winners. And I find that to be contradictory to the advice given here, and also what I've seen with my own trades, taking profits when they are there. What are my thoughts on this? So I think quick to cut your losses can burn you, in the sense that if you get into something and it's near support and you set a stop loss above that support, you cut your losses at the stop, hits support, and bounces back into green. So that's one thing that you got to pay attention to, because like when people ask me where should I set my stop, well, I would first say what's your percentage loss that you're willing to take, and number two, if you get in where the price is at, where's the next support level, and if it breaks through that support level, how low is it going to go past it, right? So that's the thing with the losses. With the winners, I would say that target a specific percentage and always take it, because if you take money off the table sooner rather than later, your win rate goes up drastically. If I try to wait for 100% winners, I'm probably not going to get very many. But if I wait for 5 or 10% winners, I'm probably going to increase my odds quite a bit, right? So the goal here is not how much money you can make, It's how much can you keep yourself from losing, right? So if you can prevent loss, you're making money. Make sense? All right. Who's next?
I got a quick question, I guess.
Okay.
Wait, I have a question.
The first guy, and then the second guy can go.
Okay.
Who's the second guy?
What's the second guy?
Who's what's your name?
Sky.
Sky.
Mine's
Okay.
Ventro.
All right, you go ahead since you're first.
Okay. So, I've been playing with a few stop losses earlier this week. I had about 100% gain. It was a rarity. I guess I got a little bit greedy, and I was waiting because it was almost approaching 150%. So market value was about 500. It went up to almost 1,000 again. I was about 250 plus, and I've just been consistently playing with Snapchat. Um, and it's really volatile. It's like Tesla number two, I would think, in its volume. But like, what are your like? Do you ever mess with it? And what are your runs with it? Like, what do you watch it, wait for it to do before you get into a good position, or you wait until you sell a position? What do you usually do?
Now you're just talking about in general with
Yeah,
my
it's
type of
just
trading.
Snapchat. Yeah, because I
Well,
was just learning with stop losses, just like figuring out like what I should set it at, like my mid to low, my high price, and then like as you were just saying, have your percentage set to where you can take a profit and be plus every time and not in the negative.
right. So so first question is, what's the time frame of the trading that you're doing?
It's like 1 to 3 days. I held a position. I got in one last Friday and I held it almost to Wednesday. So I held it over the weekend and I held it through Monday. I think I sold a few positions Tuesday, got back in at a low point, and then I waited until Thursday and I got out Thursday, I believe. Yeah.
Okay. And what are the time frames of the contracts that you're buying? So how many days of expiration do you have till expiration?
I was playing with the ones with the 18th. So on Friday, I bought a couple of that day options, which I understand is a little bit risky, but I was playing within like the 3 day barrier, 3 to 4 day barrier.
Okay, so one way to protect yourself is to buy. So let's say your goal is no more than 3 days. You want to give yourself the next week. So instead of getting this Friday's expiration, let's say today's Monday, and you want to trade all this week. Instead of getting this Friday's expiration, you get next Friday's. Right? Give yourself the extra time because number one, if your plan is to be out in less than 5 days, you're going to beat that 50% days till expiration rule that I always tell people. At 50% days left, so you got 10 days. By day 5 or 6, theta is going to have decayed a lot to the point where if you're down, it's going to be hard to come back up, right?
Right.
So give yourself the extra time. That way, if at the latest you're looking at 5 days, well, you're going to beat that 50% rule, right? So that's what I always
Right.
recommend folks to do is to pay attention to that, number one. The second thing I would say is look at the support levels of the trade, right? So 10-day, 30-minute is probably a good one to look at for
Yeah,
what you're
that's what
doing.
yeah.
And I would say, something like um, if you see a big rip like this, the support level isn't going to be this one right here, right? I would
Right.
say it's going to be the resistance right here because it ripped above it, right?
Right.
So when you see something do that, then the previous resistance level is going to be where I would look to get in. And, if you look over here, it's almost identical to that. And
Right. And so you see where it ripped up to almost 54.10, I believe.
yes.
Like I bought in at like 50. I think I got in earlier that morning, and I had seen it do it. I've been paying attention to this one. It's a regular cup and handle and cup. So I bought in. I stacked like 7 positions. It was an in the money position, and I just didn't put a limit on it. I just kept it at a market buy. So I just was trying to figure out like the good mid price, and I got burned because I was like almost 300. I one day I pulled $500 out of it, and then the next day I was like, okay, I could probably do this again because it's been consistent the entire week. So I may as well try this again, and it worked. But I went up to almost $300 that day, but then I waited too long and I didn't set it at the right time, and I got burned. That's about it.
So when you're looking to exit something, first question is, how many contracts are you buying?
Um, my range is usually anywhere from like 4 to 8.
Okay, so perfect. So what I would say is, let's say you're targeting, what was your target here as far as percentage, or did you have a target?
Not necessarily. I knew that it could really grow because I had seen it go to almost 54 earlier in the week, and I saw it at 51, so I saw it as a good potential. Because I had already know, oh yeah, this is going to definitely go up this week, and I looked and gone back and analyzed it a little bit. It was ready for a rip. So I typically take anywhere from a 20%, a 15 to 20% loss, and anywhere from gains, I look for anything above 20 to 25 usually. And if it's a smaller trade or smaller position, I go for like 10 to 15 regular.
So what I would say is, if you're doing 4 to 8 contracts, you should start shaving them a little bit sooner, right?
Okay.
Shave one at 10, one at 15, one at 20, one at 25, and then let the last 4 ride if you've got
Okay.
8. And in that scenario, if you hit like 30, get rid of 2. Now you've got 2 left that are highly profitable, and you can determine, like, if they fall down to a 20% profit instead of 30, take it off the table. Now you've got 1 left. And if it goes all the way back to
Okay.
0, you break even on just that 1. You've made money on the other 7.
All right. Okay. All right. Cool. Thank you, Sam. Thank you so much.
You're welcome.
Have a good night.
You too. Okay, Sai was next.
Hey, what's up?
Hey.
Actually, I had the same question about Snap,
Okay.
but you pretty much answered it for me too. So
Okay. So one other thing I want to say about Snap is, we got this. So you had this rip above resistance, right? This is going to be the resistance point that it ripped above. I think that when it touches this resistance level and the trend line, it's going to bounce again. All right, so you see, I already got this trend line drawn. So, and it did the exact same thing right here. All right. It used the resistance as support. It touched the trend line and it bounced. Use resistance as support right here. I touched the trend line and bounce, assuming that the trend is still up. Right. You can see how I drew the trend line here, and it runs off of that trend line very consistently, to be honest with you. Let me see if I can go completely here. Yeah, so I mean, you see, excuse me, you can see it touches it every time and just continues to follow it, right? I mean, you got it bouncing here, I guess there too, and it does a rip, comes back down, touches it, bounces, right? Right here it gets really close. Right here it touches it, and I would almost be willing to bet that it's going to do the same thing here. Now, at some point in the near future, it's not going to keep doing that, right? And nothing ever continues up. It's going to find a point where it wants to fall below that trend line, and it's going to start creating some type of other different chart pattern, right? But for now, I would say that it's the potential here for it to touch that support plus the the trend line. That might be a place to get into, right?
can you actually do one with Neo?
I can take a look and see. All right, so with Neo, it broke through its downward trend. So this is like a descending triangle, I guess you could call it. But it broke through that downward trend. It broke through the first level of resistance, which is right here. But now it's looks like it could be having trouble on this resistance point, right? Because you got this huge wicked candle with not much body, and then some red right after it. That's potentially a downward move, right? So it'll be interesting to see what this does tomorrow, to be honest with you. Um, I would say support on this one that needs to break through to reach the levels that I want to get into it. I was calling for 37 strike cash puts, cash secured puts. That's a different type of trading than what we're discussing or what most people in here probably are doing. Um, but this support line right here that I drew, um, it actually goes pretty far over here. Let me see if I can go a little bit further out. Yeah, so we've got pretty good support all the way over. Let me get this oval. So I mean, there's support. I would argue that this right here is support. I would even argue this right here is. You've got it here, you've got it here, and you got it there. All right. So the thing that I don't like about some of well, actually, I take that back. All of these support levels, except with the exception of the last one, bounces the stock, right? And it did this big fall right here in pre-market and then bounced, right? So I could argue that this was just a fluke and then it ripped and it broke through that downward trend line. But again, right now it's having an issue getting past that resistance level, right? I mean, if I go all the way in here to short term, I mean, you see what it did all day. It kind of hugged this resistance line and then fell. Had a right before market close, it spiked and fell. So now it just went sideways in after hours. Um, so this one's going to be interesting to see if it breaches that resistance or it starts to downtrend again. I personally would like to see it downtrend and come down to the $37 area so I can get in. And initially, the descending triangle, typically it breaches that strong resistance point down here at 38, but instead it went the other direction. So this one's kind of like hard to say. I think it's gonna use Tesla's strength. So whatever Tesla does, if Tesla rips tomorrow, I expect Neo to rip with it. Tesla tanks tomorrow, I expect Neo to have some red tomorrow, right?
Okay, yeah, thank you.
You're welcome. All right, who's next?
I just had a quick question based on what you were talking about.
All right.
Based on the length of a contract, like the time limit. So does it matter it profit wise when you do a contract same week versus let's say 2 weeks out? Does the profits matter where you get the same profits basically if the if you're getting the correct way that you want to go?
No. So the profit will be more on the shorter time frame, but the losses will be more as well. So if you get in at the wrong time, then you're going to have big losses. You get in at the right time, you're going to have bigger profits. Whereas the longer time frame, it's not going to. It shrinks both ends, right? So, but the beauty is when you give yourself time and it goes against you, you still have time left for it to come back for you, right? So unless you're absolutely 100% confident that you're going to be in and out of that position today, you should be doing 2 week contracts, in my opinion. Some people will argue, oh, end of the week is fine. But I always say buying options, you need to be in and out as fast as possible unless you've got time, right? So again, if you're day trading and scalping, then it doesn't matter what contract you get, right? Because you're planning on getting out today. So theta is not going to matter, right? But if you find yourself stuck into a position, let's say you get in at the wrong time and you try to hold on a contract that expires in 2 or 3 days, it's going to be really, really hard to come back from that if it went against you. Does that make sense?
Yeah, perfect. Thank you so much.
All right, you're welcome.
I got a question about Mara, Mara.
Okay.
Given the success that Bitcoin and cryptocurrencies have, and Mara seems to be making a big splash, and I sold a couple I sold a couple options that are way in the money already, a little too early. That $4 and $5 calls from January. Now it's up to 7, 9. I saw 10. What are your thoughts on that?
What is Mara?
The Mara patent company. It's a mining cryptocurrency.
Oh, so they're actually they mine cryptos. Okay. I don't know, man. I don't follow cryptos too much. I think it's going to have a pullback. You know, we've got. I mean, from what I've seen, Bitcoin is at a high. Most of the time, when things are at highs, they come back down. They don't keep pumping. There are exceptions. I would say Tesla is one. But you know, looking at the 180 here, MACD is is literally crossing over. I got a true momentum indicator that it's already headed downward. I would not be bullish on this position until, say, it comes somewhere $7 area. That looks like support. I mean, there is no support other than the resistance that it previously had. And it ranges from 650 to 7. I would go with the bodies, to be honest. I'll show you that. Well, it doesn't. I would say somewhere in between these 2 points. Maybe about right there. Oops. It would help if I had the right drawing tool. That might be a good support area. Like I personally do not like touching things that are at highs, because there's a 50-50 chance it's going to fall. Right? It could keep going. Don't get me wrong, but it could stop going too. And then if you end up getting in there at this price level and it starts falling, it's never coming back within the time frame that you are going to purchase in an option, unless you buy leaps, right? Unless you buy something that's 6 months out. You know, I think Bitcoin and all the cryptos, just based off of their charts and based off of all-time highs, they're probably going to fall. But I don't know crypto very well, so I'm probably not the best person to ask about that. I can just tell you based off of experience with all-time highs and charting that this stuff's coming down, in my opinion.
All right, cool. Thanks.
You're welcome.
Hey, I had a question.
Oh, sorry.
Oh, I'll make it quick. Um, I'm kind of new to charting and technical analysis, and I've been studying a lot of material that have been posted on the Discord over here. By the way, thank you so much for that. That was very helpful. I had a question about understanding when do you use typically a 1 minute candle or a 5 minute or an hour, 4 hour versus a daily chart, and what typical indicators to look at for what kind of situations. If there's a rundown, then you can give me real quick, or direct me to where I can learn more about these, just to see when to use that 4 hour candle, when to use that daily chart.
Well, it depends on your
So,
type of trading, right? So what type of trading are you doing first?
Actually, both the medium to long term and options with you guys, because I'm not very good at options. I tried it before on my own, wasn't very successful. With you guys, I've kind of sort of I feel like I'm getting a better hang of it, especially with some technical analysis. So I'm trying to use and understand when to use technical analysis for short term, for medium term, for long term, and for options. When to use what kind of indicators and what kind of charts, 1 hour, 1 minute, 5 minute candle,
Well,
and so on.
I never use 1 minute or 5 minute candles. At the shortest, I use 15 minute. 15 minute, 5 day. That's, in my opinion, the best to scalp with, because there's
Okay.
traps in the 1 day, 1 minute candle and the 5 day, 5 minute candle, but there are better indicators on 5 day, 15 minute as far as specific levels. Specific indicators themselves, like MACD or what, like I've got MACD and True Momentum here. I use them not for options. I use them for shares. Um,
Okay.
for options, I don't use technical indicators, and the type of trading, option trading that I do is option selling. So I don't even buy options. Um, I look at longer term time frames because of the time that I plan on being in the trade. So if I plan on being in for 30 to 45 days, I look 2 or 3 times that time frame, right? So if you plan on being in for just today, you need to look at 2, 3, maybe 4 times that time frame. So again, if you're looking at day trading on 1 day, you need to be looking at a 5 day, 15-minute candle. If you're looking at trading within 30 days, you need to be looking at um, 90 to 180 days out, right? That way you can
Okay.
find the levels that you're looking for and trade off of those levels, because if you don't look further out, then you're setting yourself up to get in at the wrong time.
Okay. I think one of the reasons I asked this is Paul had one posted to look at 5 minute candles for at least two successive candles going up without before making a decision to jump in or jump out. I think he had posted in I think at either the trade floor or lobby. So
So
maybe he uses the 5 minute.
his his style of trading, it probably promotes that type of candle, right?
Okay.
Um, my
So I
style
guess
of
you're saying there's
trading,
no right way.
what's that?
I guess you're just trying to say there is everybody's style is different, and whatever works best based on like this. It's not a science, right? It's mainly an art. So I guess there is no set in stone right way. Is that a fair thing to say?
Yes, exactly.
Okay.
The other thing I would say is each person is unique, and
Yep.
you have to determine where your uniqueness falls into, if it relates to certain people like Cal or me or Tilia or whoever. When you determine where what makes you unique in the style of trading you do, who is the closest type of trader that fits that same
Same
or
profile.
very similar style, right?
Makes sense.
Then you can start asking them specifically because they fit your style, right? So
Makes sense.
if you want to do swing trading with shares, that's my style. If you want to sell cash secured puts, that's my style. I look at, again, I want to be in a trade for a week to a month, no longer than a month and a half. And I look for time frames based off of those expectations.
Got
And
it. Makes sense.
I don't day trade. Um,
Okay.
it's too risky, and well, not necessarily too risky. I mean, it can be for sure, but
Yeah.
my problem is I don't have the time to sit there and watch the market day in and day out. Like I've got a job, I've got a family, I go to the gym, I got a lot of responsibility. I do a lot of things during the day, so I can't sit in front of the computer. So that's why I took on the type of trading that I do, because it allows me to continue to play the market and not have to watch it on a day-to-day basis.
And if
Okay.
I'm being honest, hostile. That's the way route I want to go, because that's not sustainable to sit in the front of the computer all day, weekend, nights, evenings. Trying to catch the next big one. Especially when you're just starting out and trying to get the hang. I guess that makes sense what you said. Thank you so much. That was very helpful.
You're welcome.
Hello.
Hey.
Hey, Professor. So, I've been looking at like chip makers, and like I noticed over the weekend, like AMD and Intel. Um, what do you think is like the future outlook with them? And do you think like Intel's in a lot of trouble right now, or do you think there could be a bounce back? Thank you.
Yeah. So I think Intel is in trouble. Microsoft has turned away from them. Apple has turned away from them. Let's see, somebody else that has. I think Tesla has as well. Nvidia has. And there's some companies that had contracts with Intel that broke their contracts. Do you know what a data center is?
If you can elaborate, thank you.
Okay, a data center is a warehouse full of servers, thousands, and they run a lot of virtual machines potentially. Intel specializes in single application compute, which basically means you run a video game, Intel performs the best because it concentrates all of its processing power into that program. Whereas AMD, their their processor shines when it splits up its processing power into multiple virtual machines. So data centers have more virtual machines than single processing applications, right? So, like even for example, there's a server in a data center and it needs to run 10 applications. Intel can't do that very well, but AMD does. And AMD positioned themselves to be the front runner when it comes to large data center um, compute solutions, right? So they provide majority of the data center processing power. Nvidia, they provide most of the graphics processing, right? So Intel is struggling. Like their customer base, back in the 90s was basically the same customer base as Microsoft, right? The person with a desktop computer, whatever, every house, or they were trying to push it out to every single house out there that had desktop computers. Mobile phone apps and games weren't a thing then. So that was the big thing. And Intel had the foothold because they were partnered with Microsoft or vice versa, right? And as all of that started to change and data centers became a thing, that's where AMD decided that it was going to make the switch and stop going after, you know, you and me, and instead go after the big players, the ones that are spending hundreds of thousands of dollars on hardware, right? Instead of, again, you could have a million people buying Intel processors for their desktop computers, or you could have hundreds of millions of servers in data centers. Like one data center by itself could have hundreds of thousands, right? I mean, my job, I work in infrastructure and IT, and I manage uh, storage environment, and I'd say 60% of all of the stuff that we provide storage to uses virtualization, right? Like Linux machines, Unix machines, ESX hosts, Cisco UCS racks, they all have AMD. There is no Intel, right? Only the computers that are Windows operating systems that are standalone, one system, they still use Intel, but they're phasing it out because they know they can get AMD for cheaper. They can get more processing power out of it because these standalone systems, they need to run multiple database applications. They need to run multiple applications specific to their job duties, and Intel can't perform like AMD in that sense. So, long answer is all of that. Short answer is AMD is on top, Intel is in trouble, and I think they're going to continue to see trouble until they find a way to innovate themselves out of the hole they're in. And they've been allowing themselves to be in this hole for years. Right? They thought they had a stakehold in the market, and Nvidia or AMD is quietly behind the scenes striking deals with all the Linux users, all the ESX host machines, all those types of pieces of equipment, and that created their foundational strength. So now they have that foundational strength, and they can start targeting you and me again, right? And now that they have the money behind their foundation, they can start to concentrate on the thing that made Intel on top. So I think they're going to continue to outperform as long as their processors are beat Intel. Now, when it comes to gaming, AMD still lags behind Intel just by a little bit. But when you compare the pricing, the same processor that AMD, I think it's like the top one of the top Ryzen processors. It's like a 12 or 16 core processor you can get for $400 or $500. The same exact Intel processor is $700 to $800, right? And it only outperforms AMD by a small percentage on benchmark performance, like maybe 2.5 to 5% at best. And you're almost paying double for the same processor, basically. And if you're into, like, when I open up Thinkorswim, which is what I've got on my screen right now, and I've got 12 to 16 screens up, my Intel processor is struggling. But I guarantee you, if I get an AMD processor, I won't have as much problems, because this platform, it eats up a lot of CPU when you've got multiple screens open, and each screen acts as a different instance. And that's kind of what virtual machines are. They're multiple instances inside of one system, right? So just think about that. And another thing that I want to add is Nvidia is starting to look into creating their own processors. Now, they're probably a few years. It's probably going to be a few years before they start unveiling something. But they do have the strength to do it. Their graphics processing units are basically CPUs, right? And they've learned how to increase the speeds on those. And now they're seeing the competition between AMD and Intel. And I guarantee you, they're going to find a way to create processors that directly compete with AMD as far as multi-core processing, hyper-threading, and all that type of stuff.
Professor, I'm so sorry. I actually didn't hear anything you said. Is there any way? I'm just joking. I'm just messing with you. I heard everything.
I was going to
Sorry
say,
about
well,
that.
you're going to have to watch the recording.
Thank you. So I guess pretty much like sorry guys, I had to. But anyway, so it sounds like AMD and maybe even Nvidia are almost like they're preparing for the future. They're future proof. Where like Intel, they're lagging behind and they're going to become a little more outdated.
Yeah, I totally believe that. I mean, AMD is positioned currently to be the future main go-to. Nvidia is going to start trying to do the same thing that AMD had been doing to Intel for years, is trailing.
Right.
So it'll be interesting to see what Nvidia comes up with. But I do know they're in the innovative or they're trying to innovate chipsets to become CPUs.
Thank you, everyone. Thank you, sir.
No problem.
Yeah, I got a question, sir.
Okay.
I just like thank you again for the opportunity. I just getting into options. I get confused on the bid ask price when you're trying to buy a contract in Robinhood. What is the difference in those numbers? Sometimes it's a few cents, and sometimes it's like even as big as a few dollars.
Okay, so first, bid and ask. Bid is seller's price. Ask is buyer's price. right? The difference between the two, if it's a small spread, that means that there's almost equal number of buyers and sellers. If there's a wide spread, that means it's lopsided on one direction.
Okay, that makes sense.
And you don't want to be in a position that's lopsided. You want to have equal amounts of buyers and sellers so that it's easy to get in and out of that position. And not only is it easy for that, it also makes the value of the contract a lot more fair.
All right, yeah, that actually helps me out a lot. I was actually because I'm new to the group, and I appreciate that answer. So thank you, sir.
You're welcome. And I would like to recommend that you get off of Robinhood.
Yeah, no, that's what they're all saying right now. I keep hearing that, but
So
like I just said, I'm just way brand new to this group and all this all together. So that's kind of what I'm hearing across the board.
on my channel in the education section, I have made a video about it, and it explains why I think it's terrible. And I suggest a couple options or choices of brokers to use in the video. So I recommend you watch it. I think it will be very beneficial for you to understand. It doesn't matter, in my opinion, it doesn't matter which broker you get as long as you stop using Robinhood. That's the main
I have
thing.
a Nvidia Ameritrade account. The platform is so confusing and hard to use, and I don't time to learn to use it. Robinhood is just like it's a little bit simple compared to what time I have to use to trade. You know what I mean?
Right. So my video explains towards the end why I think TOS is the greatest, but that specific reason right there is why I always recommend people to go to Webull instead, right? And Webull is a stepping stone to Thinkorswim. So from Robinhood, it's best to learn something that's not super complex. And in my opinion, that's Webull. Once you learn Webull pretty well and you understand option chains and all, charting and some stuff, then you can jump over to Thinkorswim, and it'll be a lot easier for you to grasp, right? Versus going, it's like you come out of the womb, you go from crawling at Robinhood to running at Thinkorswim, right? Webull is the walking.
Okay. Yeah. No. Yeah. That makes sense. Thank you for that answer. Again, it's very thorough, and I appreciate it.
You're welcome. And like I said, watch the video, and I think that'll answer some more of the questions that you may or may not have. And it might pop more questions up for you, but I think it'll be beneficial for you to see.
And Robinhood gives that little explanation before you go into options, like right there at the beginning, right before you make a decision to do it or not. And I'm still like, I don't know much about the platform altogether to even make a decision on their platform. So that's kind of where I'm staying, where I'm at. I just don't want to jump into other shit and mess it up. I mean, excuse my language, but yeah. So
Yeah, I mean, well, again, check out the video. If you got questions, feel free to come back to this live Q&A. I got no problem answering them. So, I
no, I
mean,
will. Thank you again, man. Thank you again, sir. Appreciate it.
you're welcome. And I hold these
Hey,
every
Hostel.
Thursday and Sunday at 9 p.m. Eastern. Just FYI.
Hey, Hostel.
Hey,
Can you talk to us about sweeps, and do you use sweep analysis to determine long-term plays by seeing where the smart money is going?
no, I don't. The reason I don't use sweeps is because you don't know which direction they're going, right? So if 1,000 calls comes in, you don't know if they're shorting it or if they're going long, right? And what I mean by that is you don't know if somebody's buying contracts to enter that position or if they're selling contracts to enter that position, right? So that's what makes that scary, because you only know that somebody entered that strike, but you don't know which direction, right? So, and it doesn't tell you if it's so sell to open and buy to open is what I'm referencing. Buy to open
Right.
is when you buy a call at whatever strike you choose and you pay money. Whereas sell to open is you sell a call at whatever strike and they pay you money, right?
Mm.
So you can't tell the difference with sweeps on that. You just know that somebody's on that strike. And that's why I think it's dangerous. And believe it or not, there is a lot of people out there buying options, but I'd say there's also not equal amount of people selling options, but there's a significant amount out there.
Okay, good to know. Thanks.
You're welcome. Okay. Who's next?
Hostel, I got a question about Oracle.
Okay.
It's been on a steady increase, but I'm thinking about some longer call options. What are your thoughts?
I would wait for that to.
I have a few contracts already. One of them I'm up 100%, another one's up 15%. I just don't know if it's going to last.
I don't think it will, personally. I mean, so let's see. Back in August, it hit a high of 66. Current price is 65. It's $1 away from that high. It does look strong. So if you look at the volume down here, it's increased or at least stayed the same. That's a good indicator that it will continue going, but at some point, this is going to find the top and start falling. I don't like being in a position to try and squeeze it or bleed it dry of profits. Me personally, I would get out of profitable positions. And I tell that to anyone that's in a profit. I mean, if you got a 100% return, I would tell you to get out of that. 15% return is good. Get out of that one too. But again, there's no way to tell you if it's going to keep going or when it's going to reverse. I always say, take the money you got because the market's going to take it back if you don't take it.
Got it.
And this is a funky looking true momentum. I mean, look down here. It's kind of going sideways in the red. So the red zone is overbought. Green zone's oversold. And it's been in the red zone for, well, let's see. What day is that? 1, 2, 3, 4, 5, 6, 7 days, 7 trading days. It's been in the overbought zone. And as you can see here, one thing that I like to pinpoint on the MACD, this is the only thing I use MACD for. When you see the two lines spreading across from each other pretty far, that to me says there's going to be a pullback, or at least this blue line is going to come back to this white one. All right, so let's see. See if I can find a good one here. And it's not always true, but a lot of the time I've seen it work pretty well when it's really far apart from each other. And I'd say the current movement for Oracle, it looks like that's the furthest apart from all these points here, except maybe this one. All right, you see how, so if you look, the blue and the tan, they're really far apart right here. And then you look up here, equivalent to where that same point is, and it rips, right? Within what, 2 days, it ripped pretty hard. And again, if you look at the space between the two, it's almost identical here. The space between the two. Does that make sense?
Yep, makes complete sense.
So, and you know, we're I mean, it's coming up to that $66 area. I mean, I think it could potentially get up there, but I would be nervous to continue holding that. Because, you know, if you're not watching it and, you know, you go to lunch or something with your girlfriend or whatever, or if you're married with your wife, and then you finish and then you look back at it and it's dropped $2 from that high. You know what I mean?
Yeah,
like,
everything's gone.
yeah, there goes your profits. So I recommend you take it. But that's just me.
Awesome. Thank you so much.
You're welcome. Okay. Who's next?
So I wanted your opinion on a Roku. So I have like two puts for next week and the week after that for $330.
Hmm.
So what's your take on that? Like, where do you see it going?
Well, I can say that since the COVID low, which was really freaking low, I mean, good God, look at that. That's a huge return. Anyhow, all of the waves that were green do not compare to the one that we're in. I would agree on puts, but I would say that the time frame that you have is too short. I would have went with a month out personally because here's the thing. Historically, the bear market starts middle of January to February every year. Um, March is bearish to neutral. April is bullish. May is neutralish. It could go either way in May. June and July are bullish. August is typically bullish, but up to maybe the middle point. Could be the end. September, October are very bearish. November, December are very bullish, right? And that's what I've seen over the years. It's not like just this year. I mean, this year was almost identical to, or almost perfect example of the months, right? Um, Let me go a little bit further out so I can explain it a little bit better. So as you can see, starting in January, for Roku specifically, it starts falling. Before, even before COVID, this candle right here, it's like the last 2 weeks of February. Last week or 2 weeks of February is where COVID really started hitting the mainstream media, and then it started tanking. But prior to that, it was already in the red zone, right? As far as being bearish. So it was almost identical. And then, come April, look, it's all green. And then you hit May, it's red. And then June, it's all green until you get to August, right? And then it shows a little bit of red, but then this thing's just been pumping since. So, and when you look at, so right here, you've got basically the last week of October. And then from then on, it's all November, December. And look how that thing is really ripped, right? So the months make a huge difference. A lot of people don't think about quarterly trends in the market as a whole, and every stock performs differently in those time frames, but they all are generally the same direction as the market as a whole. So some arrive to their all-time highs later than others, and the ones that get there first start going neutral and slightly bearish. The ones that hit it later, they tend to hit bearishness a little bit quicker, or the exponentiality of the fall is typically higher because it's the last one to hit the all-time highs, right? So you got to keep that in mind as far as the months and quarters of the year. There is a trend overall or over the whole market where in certain months things start changing. Does that make sense?
Yeah, yeah. I was thinking of it like it's like in last 1 month it's like very, very overbought. So I thought it might pull back a little bit and I could might make some money off of that. So that's why I bought puts.
I mean, you could, don't get me wrong, you could very well see some kind of pullback. But I think Roku is in an uptrend. I mean, I can draw a trend level here, and I would probably draw it off of this point. Let's see. And it's going to have to break the trend to be honest. I could argue that, but I don't. I would go more. like that, right? Because what I'm doing when I draw a trend, I like to incorporate as many points touching that trend as possible and to kind of average it out, if that makes sense. Right? So you see all these points that are touching that trend line, right? That's a lot. So if it doesn't break through that trend and just bounces off of it, you know, it could be bad, right? I mean, and at this point, Roku just has to go sideways to touch that trend line. So unless it opens in red Monday, it's probably going to bounce. That's just my opinion, though. It could very well do the opposite. But I will tell you that true momentum looks like it's turning red. So you might see it do something like this point where it broke through the trend and then went back above it. Make sense?
Yeah, yeah. Thank you. Understood.
You're welcome.
Hey, Hostel, I showed up late. Did you do analysis on Disney and PLTR yet for the group?
I have not. So Disney here, I think. Hmm.
I know there's a bunch of folks on the 190 December 31st call there, and then on Friday it dipped down, and a lot of people got back, averaged down, and some people even got back in on it on the Friday your end of day.
And that's such a really short time frame to be looking at. I mean, COVID low was 94, and I don't know. I mean, a lot of people think that Disney Plus is going to give Netflix a run for its money. I don't know how I feel about that because I don't think there's too much on Disney Plus unless they start. So Disney owns Marvel and the Avengers and that kind of stuff. So unless they only allow you to view that stuff on Disney Plus, I don't see how it's going to compete with Netflix. Right? Netflix has its own um, what do you call it? Production studio. Like they come out with videos and says, or come out with movies and it says strictly Netflix videos. Like you can't watch it anywhere else. Um, I don't know what to say about this one. It's at a high, roughly. I mean, pretty close to it at least. It's going sideways, so it's consolidating. Um,
Yeah, I think with the
that's a,
consolidation, from a technical analyst perspective, it looks somewhat bullish. I guess you can argue that fact that it's going to pop.
I mean, maybe because I mean I'm seeing it looks like a potential cup and handle right here. That right there. It's more of a V though, not a U. Cup and handle is traditionally a U, but it does have the handle. Um, so it could. I don't know. This one's tricky for me. I mean,
Yeah.
I don't know. I don't really have too much of an answer for that one because
Okay.
I don't
Well, I
like
guess
all-time highs. I would never invest in all-time highs. Even if it's going to hit 300, I wouldn't buy that. I'd wait for a pullback and then get into it.
Okay. And how about PLTR? Kind of similar situation. Oh, you already have a thing on it, so it looks like it's gonna pop soon, right?
Yeah, I think there's potential for it too. It's a descending triangle. Typically descending. Well, hmm. So in this scenario, I would say that I think that it's going to come through that support level and bounce off of the $24 area and then continue up, or maybe kind of hover and a kangaroo around that support level. So let me show you BA, right? BA is a perfect example of what I think is going to happen with PLTR. Right, so this big circle here, a descending triangle, it breaches through support, it bounces off a resistance level over here, and then it kind of just bounces around here. It does the same thing here. This time it bounced off of this support level, went sideways again, bounced off it again, and then ripped. So, there's a lot of like, I think this is going to be PLTR, but not quite as drawn out. I think it's going
Mm-hmm.
to. Let me get rid of this. I think it's going to. Obviously, it's done this. Right now, it's all of this. I think it's going to do this drop, and then I think it's going to come back above it, maybe go sideways for 20 or 30 days. Do this right here, and then start up and start testing its previous high. Does that make sense?
Can you look at that? Makes sense. Can you look at Peloton? I think Peloton did something similar, but then it just ripped up, and that's what I'm kind of seeing. A few other guys talked about it in the group too, that it's a very similar type pattern.
I would probably say something like that, and then it bounced off resistance, which was there. So yeah, I mean, I think that's somewhat similar, not
Mm-hmm.
completely. Let me go closer.
Mm-hmm.
So I mean, here's your descending triangle. It rips above it and then tanks, bounces off of a support and or resistance area. Right, that's where I'd be looking to get into it, and I'd be
Mm-hmm.
looking to buy something. If I was gonna buy calls, for example, I'd be looking to buy something that's a month out because you need to give it time, right? I mean,
Yeah.
this whole area, if you bought, honestly, if you bought a month, if you started right here, so if you started here, you got in at the right time, and you bought a month, this movement here is going to hurt you. That whole entire sideways movement is going to kill you, right? So again, I would probably say 2 months, a month and a half, because that 50% rule of days till expiration matters so much. I mean, granted, it's in a slight uptrend this whole time, so it might not hurt so bad because it's got that slight uptrend. So it's continuously going up with the stock price, right? And you would probably be break even this whole time. And then the moment that you see it, I'd say somewhere in this time frame is when you see profit.
Mm-hmm.
So and this is why I do cash secured puts, because when stuff goes sideways, it benefits me. Right? And cash secured put, I would sell a put at this level. It's basically at this particular level, I'd have for Piton specifically, um, let's just say $100 strike. I would need $10,000 to do a cash secured put on this. So I'd have to basically set aside $10,000 from my account. It would pay me a premium of potentially 1,600 bucks, and the price goes sideways. It loses theta, or theta eats away at the contract that I sold, and that benefits me because it erodes the value so that when it's time for me to exit that position, I've got to buy it back. So the goal is for me to pay less for it than I got paid for it. And if it does this rip here, so let's say I had a $100 strike, and I got paid $1,635 for it, it would be worth $255 now. So I would only have to pay $255 to get out of that. So my profit would be 1635 minus 255 would be $1,380, right? And that's just a very general idea on cash secured puts. There's a lot of other things that go into that, but just using the numbers I got in front of me, that's kind of an average of, had I got in right here with a cash secured put, sold it where it's at currently, that's the value that I'd be at, roughly.
Right. So basically, you're just saying you're just selling the premium. You're just collecting cash, hoping that it's not going to drop underneath $100.
Right. And if it does
Right.
go underneath $100, I own shares.
Yeah.
So whereas if you buying options, you don't have that kind of protection. You have no protection. Theta's not your friend, right? You need the stock price every day to move up.
Yeah.
You
But
know,
like you say, when you're selling those puts, you need a lot of cash to secure that put, right?
yeah,
Unless you buy, unless you do a spread that minimize that cash.
yeah, and a
But then
spread is
then your
gonna,
upside's limited, right?
yeah, basically. I mean, spread would be $270, but a collateral is gonna be high. Well, actually, collateral is 230, but only because I think it's at a high, and the premium's pretty high for that spread because the chances of it falling are higher than the chances of it rising. So if I did like a call credit spread on this side, I'd only get 177, but then you see the collateral is 320, or it's $500 collateral. They pay me 177. Max loss is $323,
Mm.
assuming it doesn't go far in the money. If it goes far in the money, that max loss increases, right?
Yep. No, that makes sense. Do you ever do iron condors on stocks that are kind of neutral,
So
or you kind of stay away from that?
if I do iron condors, I'll enter in the spreads at different times, right? So
Mm.
if it's at a support level, um, and I sell a credit spread for 60 days out, for example, and then within a month and a half it goes up to um, a high, I could sell a put credit spread on that side at the same expiration,
Right.
and that basically turns it into an iron condor.
Got it.
I think it's safer to do that, especially if you can time it better, because if you try to, like, you get less premium when you do an iron condor at the same time, right?
Hmm.
So if you're a lot, the way I learned how to do iron condors was, so let me find a different stock, something that's kind of in the middle of its range. Exelon, I think is. Let's see. Nope. Gold. All right. So let's try this. So, man, this that's not gonna work. Support levels down there where it's kind of at. Okay, IBM. I think IBM might be okay to do. So 125, high of 142, low 105. So yeah, you see these two ranges, or the range here, 105 to 142, prices at 125, right in the middle. I was taught to do iron condors like this. So I would go in, I'd look for ideally 45 days out, but only touch monthly contracts because you've got 4 contracts in iron condor. And I would look for a 15 delta. Um, so maybe 18. And then on the other side, I try to make it 30 total, if that makes sense. So 15 there. So then I would basically sell an iron condor. Where are we at? Condor. And then the bottom side's 110, 105. So we'll create this real quick. All right, so that's paying $442, right?
Mm.
Collateral Whoa, that's really good actually. $58 loss and can make 442.
Also, can you right click it and do the analyze trade so you can kind of show
Sure.
the profit chart that way? For me, that's when it kind of taught me how to visualize it better. If you pull out, then you can kind of show everybody what the iron card are and how you win basically, because I'm sure a lot of people don't know how it works.
So this is actually inverted. Whoopsie.
This is inverted though.
No wonder why. Okay, hold on a second. I did the wrong side. Just fix that. What was my other side? 140, 145.
And as you do that, you're looking to close this iron condor probably what 20 days out, 15 days out.
Yeah, I would say so. So we got to get this on the right side first. Hold on. Got something wrong here. It's been a while since I've done iron condors. Hold on. Hold on. Fix this.
You're looking to sell the 140, sell the 110, and buy it back at
So I need to. So this
sell
is
the
the bottom side.
140.
This is the bottom side. So this needs to be 105, 110. I'm not sure why it's inverting. That's weird. Hold on a second. I gotta brainstorm here. This isn't.
So
Typically,
you want to sell the 140 call and then buy it back at 150, let's just say.
right. The 145. Okay, that's probably the. Let me get it backwards like that. Yeah, okay. So this needs to be 110, and this is 105. There we
Yeah,
go.
there you go.
See, now it's debiting me. See that? It's turning into basically a buying position, not a selling position.
Yeah, the numbers probably didn't work out, but that's essentially what it is. It's just
Yeah. So
okay.
by expiration, what did I choose here? February 19th. A $57 profit. If it see, I don't like this, man.
Yeah. No, it's fine.
I don't know why
Another day.
it's doing that. That doesn't make any sense to me. It should be the other way around. I don't know why it's inverting. It doesn't make sense. Let me try this real quick. So sell iron condor. Oh, I know why. I know why. Because I was choosing condor, not iron condor. My bad, guys. All right, so this is 145, 150. There we go. That's what I'm looking for. And that gives me a $78 credit. Okay, so now let's think about this for a second. If I bought a credit spread or sold a credit spread at the money on support when the price was low, I would get a lot more credit, right? I'd say at least $100 on the bottom. And then vice versa, if I were to sell put credit spread at the top, I'd get a lot more money, $100 at least. So it's if you get into an iron condor at the same time, both sides, both legs, then the profit is smaller. Whereas if I get into it at the bottom first and then wait for it to pump and then get in at the top, I'm basically taking in maximum premiums from both sides. Whereas this is an average of both sides of premium, if that makes sense.
It makes sense.
So that's why I would say I like to get into this when it's at the bottom. And then once it starts coming up here, let's say, you know, let's say, let's try this. So let's say I think 125 is the top, right? And I get paid 160, right? And then as the price falls, IV would probably be in my favor. So I'd probably be looking into, selling. So let's say the price gets down to 115 or so, right? I'd be looking to sell a little bit further out of it. So I'd be selling it off of the support area. So let's see, 115, that would be, support is at 105, 106. So about $10 difference from at the money. So I'd be looking at, $100, right? So now with the two positions combined, that's 170 to $200 depending upon IV. Whereas if I sold the Iron Condor as a one piece, it's $78.
Mm-hmm.
So
Okay, yeah, thanks.
yeah, you're welcome. Sorry, that was pretty drawn out because I chose the wrong strategy. It was Condor, not Iron Condor. So yeah. Okay. Who else has questions?
Yeah, I do. Hello?
Hey,
Yeah, I have a question too.
I just wanted to ask, I don't know, I got in kind of late, but I don't know if you went over XPEP.
XPEV.
Yes. Well, XPeng.
Okay, yeah, okay. This one's doing that. This one literally follows Neo. But it's doing that
Yeah.
descending triangle thing, right? And I think it's going to fall below the support level and probably bounce somewhere between 35 and 38. So it's going to touch one of those levels and then bounce up and then start a new uptrend potentially. That's my thinking here. However, with the recent change in the trend, it may not, right? It may use this area, the bottom of this wave, as its support. I like to let these types of plays shake out. I like to let these tickers do their thing, establish a trend, because right now it's a conflicting trend. So it's down, then sideways, could be up, could be back down. So I need to see it show me something specific before I decide I want to get into one of these plays. I won't take the play unless I'm confident in the direction of it. Or I have a great support level to get into. I really love support. I don't like resistance as much because the market overall in the long term, it's bullish. Whereas, and that's why I like support levels, because I know in the long term, if I've got to hold a position, or if I sell a cash secured put and I get assigned shares, I know within a couple of months it's going to come back above that and I'm going to be in profit. Whereas if I go against the trend, the long term trend of up, and I am bearish at resistance, then I have a limited amount of time before I need to be out of that before it starts to breach through my resistance point. Make sense?
Yeah. Yeah. I understood all that. Thank you.
All right, you're welcome. Okay, there was another person that had a question.
Yeah, I had a question. So you spoke earlier about the bid and ask prices and how having a large spread between them isn't good. Would that be the same thing between like the inflow and outflow of orders?
No, inflow and outflow is going to be open interest and volume. So inflow is open interest, outflow is volume. So inflow basically means, I think from my understanding, if I understand it correctly, inflow is when somebody gets into a position based off of that strike. Outflow is when somebody exits that position based off of that strike. So getting into that position is open interest, and having contracts open and getting out of that position and exiting positions or exiting contracts is volume.
Okay.
All right.
Yes. Thank you.
You're welcome. Who's next?
Hey, also, how you doing?
Good. How are you?
Doing well, man. So I'm gonna come in with the newbie question. Just joined the server today. Excited to get started with you guys. A lot of information to digest, but just want to ask about on the challenge. I see a new challenge has been posted. Looks pretty cool. 510K. It's awesome. Just where to get the information that kind of how to follow the pipeline of information being flowed through. And I guess just to give you a general idea of where I'm at, I think I'm kind of following your strategy as well. I don't really have the time to sit on a computer every day. So, the long play, making the trade maybe once a week or every month, something like that is kind of what I'm looking at strategy wise. And yeah, I'm excited to get started and just looking for your guidance right now.
Okay. How big is your portfolio?
Coming in with some also gonna have probably a little delay because I had to transfer everything from Robinhood over to TOS. So I know the account transfer is probably gonna take 5 days. I transferred some play around funds to the account just to start with, but I'll probably have around 10K to play with to start with.
Okay. Well, that's a decent number to start with. So if you're interested in my strategy, I do share swings. So I buy shares at support, and I'll wait and hold it. Um, Sometimes I'll be in and out within a few days. Sometimes I'll hold it for 2 weeks. Sometimes it's a month. It just depends how I feel. Depends what I'm seeing. And I typically, like, I don't sit in front of my computer and watch the market all day, but I do occasionally check my phone, right? So every 30 minutes to an hour, I mean, I'm pretty obsessed, honestly, because my positions are swings, right? I mean, my mindset is a month, give or take, a week. So honestly, I don't need to look at it every day, at least once a night. So every time I'm 9, 10 p.m. at night, I'll come in and I'll take a look. It depends where the stock is, right? If it's pumping, that's different. I'm gonna really be on it all day. Every 30 minutes to an hour. Whenever I get a free chance to check my phone, I'll uh, I'll see where the price is at. I'll see what it's doing at resistance or support or whatever the case is. Um, this is an option server, obviously. If you're interested in a long-term play that, well, not necessarily long-term, but kind of the same strategy I'm using, cash secured puts is the safest strategy. You get paid premium. You get paid. So, like, let's say I want to get an XPEV, right? I think it's at a pretty decent level to potentially sell cash secured puts. I would do 30 to 60 days out. February 19th is 61. Um, I would get paid $605 at the 45 strike. So I'd have to commit 4,500 bucks. But you're not actually buying the shares. You're just putting your money aside, where it says that if it goes below your strike, you're going to own the shares at $45 minus the 605, right? So 4,500 minus 605, your break even would be $38 or 38.95 strike basically. So $39 strike would be your break even on something like that if you get assigned shares. Whereas if it does not assign you shares and pumps, this is going to pay you. You're going to be able to see profits here, right? So let's say tomorrow it pumps to $60. Well, this $605 position or contract that it paid me, so that's three strikes above. So I'd potentially be seeing $300 to $400 in profit. So to get out of that position, I'd have to pay around 200, 250 to get out and keep what's left out of the 605. So I'd basically profit around $350, right? The beauty of this is that you've got 60 days, right? So I got 60 days for this price to just go up and stay above my strike. That's what I'm looking for. And when I like to sell position, that's why I said this is actually not a bad area. Like if I can sell strike $43 strike, um, it's not going to let me do that for February. January will. Well, nope, it's still $5 difference. So even better. Um, I would probably sell this when it hits $43. I would sell an in the money $45 strike. It's going to pay me around $700 to $800 in premium. That's a perfect support level, right? Because you got the $43 mark here. So if it hits $43 even, I'll be in the money on the cash put, but I've got 60 days for it to come back up above that. And like I said, the beauty is if it doesn't come back up and it falls, you just own shares. And then I can sell covered calls against it on the shares and taking premiums on that as well. Which in that scenario, if I were to sell at the money covered calls, I'd be getting $565, right? So um, it's a really safe strategy. You just need a decent amount of capital. 10 grand is going to get you two of these positions, right? I always tell people no more than 5% of your account in the market or in a position at any one time, no more than 50% of your total account in the market at any one time. But cash secured puts are an exception, right? That's an exception. And the other thing here you got to remember is $605 divided by 4,500. That's a 13.4% profit return potential, right? So 13.4 divided by 2, if I were to take a 50% return, that's a 6.7% realized gain. And my strategy for long-term investment accounts, such as Roth retirement accounts, I go for 5%. So 6.7 is fantastic in this scenario for me. So I actually might be interested in this one if it hits 40, 45 bucks or 43 bucks, somewhere in there. But like I said, I was telling somebody earlier, Neo is the one that I like more because the premium is better, right? So same price roughly, but look, premium's higher by at least 170, 160 bucks. And I like Neo down here. So if I can get Neo when it comes down to this area that I'm hoping, down here at 37, 38, I'm totally interested, and I will be doing cash secure puts on that. So, and it's cheaper, right? So instead of a $45 strike, so 4,500 bucks, now I'm only paying 3,700, and then if I get a $700 premium on that, then the share is only going to be worth $30 a share for me. So um, there's reasons why you choose specific stocks, and that's one. Uh, Neo and XPEV are relatively the same exact thing. Chinese EV companies. XPEV moves in price a lot more than Neo, but Neo has a lot more volatility or liquidity, I should say, which kind of translates into implied volatility. But you want more liquid things, I think. So let me just check one more thing before I So we're looking at within a week, 7, 18. So let's see, hold on a second. 7 plus 18 plus 11 plus 12, 18. And then we got 20, 22. So 108 million shares in a week for NEO. Now let's take a look at XPEV. No way near the same. 2. I'm not even going to bother to say 2. I'm going to have to use a calculator for this. 2, 3, 5, 1.5. So 6.5, 7, 8.5, 9, 10, 11, 12, 15.5, 20.5, 25.5 million versus 100 plus million. So you see the difference there in liquidity. There's a lot more liquidity in NEO than XPEV, even though XPEV went up much higher in value, right? So I know it's probably long and drawn out. I'm not sure if that necessarily answered your question, but perhaps it gave you more ideas.
It did. Yeah, no, you're good, man. That's it's a lot to digest again, getting into this. And don't get me wrong, I'm also looking at doing swing trading as well. It's just the your strategy with going a little bit longer is more attainable for me just because I'm in the military. I just got out of the field for 4 weeks. Today's my first day back on the computer, and somehow I joined the option trading group and we're already getting into it. So it's like there's gonna be times where I'm just gone for a long time. So the long strategy is just something that's more attainable.
I see.
But there's also times where I'm back for a long time, like the next 6 months. I'm just going to be doing Russian for language. So I'm going to be in a school environment learning Russian. I'll be on my computer every day. So swing trading is something I want to experiment with as well to just, get into tune with where I'm at trading, what works for me, how that all works. But obviously, this is a process of learning. So I'm extremely interested in what you guys have to offer and on the platform because it looks like a lot of good information.
Well, I will say that just kind of off the top of my head, if I were in your position, I would probably concentrate on shares. You can learn how to swing shares in the sense that you'll be here for 6 months, but then there's going to come a point where um, you're going to be out in the field for extended periods of time, and options is not going to be ideal for something like that, whereas shares will be. And the beauty here is let's say you've got $30,000. So let's say you've done really well in the next 6 months, made a lot of profit, and now you got to go back into the field. Well, you can look at a handful of stocks that you like. You look at their support levels. You can set limit entry orders for all of your share entries. And let's say you can split it all up into, let's say you got 10 different tickers you like a lot. You can put in, $1,000 or $2,000 per position and set limit entry orders at support levels so that let's say you're out in the field for 6 months and the first month or two the stock hasn't hit your entry order yet, but then come month 3 it hits it and initiates it. You're in the position but you're in the field, right? And then the next 2 to 3 months, let's say you return back, stock's at a high, right? So you didn't even have to pay hardly any attention to it. It entered your position without you doing anything. You could even set limit exit orders on that position. So you could look at resistance levels and say, hey, I think a stock's going to come here. It's going to probably touch this level and fall again. I'm going to set a limit exit order. So you could be out in the field for 6 months. Your position could have entered and exited a point and made money while you were gone. So that's why I would say shares is probably going to be more suitable for you because of that whole, not being able to consistently do something, right? 6 months on, 6 months off. I don't really know what you're going to be doing. But with the military, what you're going to be doing. But with the military, like, whoa.
Yeah, I agree with you. It's actually I from hear you.
Hold on a second. All right, there you go. Somebody had a really busted mic or whatever. But yeah.
On the share, it's actually funny because I was just in the field and I came back and all of my Neo shares sold. I made a brand off them, but I had a stop loss on it, and they all sold while I was in the field.
Yeah, that's great.
That's pretty much all I have been doing is shares. But obviously exploring now into options and getting more technical with it. I don't know any of the technical analysis stuff, so even today, sitting down for the couple hours that I did and looking at your guys' forum with the technical analysis stuff you guys have posted, it's just lots to digest, but it's good. I like it. I like learning. So just trying to be guided by the group. And but yeah, I agree with what you're saying with longing and going to shares for when the uncertainty comes around. Before I go, I guess, do you, as far as resources, any more that I could, or a particular area I can go in the group to look at the strategies or follow a certain guideline or YouTube videos, any resource you have to kind of further get me on the path?
Well, my style of trading
of
and
doing
analysis,
right.
I've made videos on my education channel, so that could be a good place to start. If you look on, let's see, here, I'll at you on that channel,
Yeah.
and that way you know where to find it, and you can just look at the pinned tab and all of the videos that I've made as far as like technical analysis goes. They're there, so you can watch all of them, and you know it should help you. I truly think it will. I mean, everybody that has watched it told me that it really helped them, so I think that'd be a good place to start. It doesn't necessarily, actually, none of it pertains to options, but the type of analysis that I'm showing can be used with options 100%. And I also discuss Roth IRA account as well. I assume you're pretty young.
I actually saw your Roth IRA Excel sheet. I downloaded it today and took a little look at it.
Yeah, I mean that's the type of mentality I have for my retirement. Right, I'm 37. In 23 years, I'm looking to have $18 million or something, and be making $100,000 or $200,000 a month on my money. I mean, imagine the lifestyle that you could live making that kind of money every month. But if you're young, if you're in your 20s, you've got more time, right? So, especially if you're in the military, you don't. A lot of things are provided to you. I mean, yeah, you're probably gonna want to spend some money on, you know, when you get what's it called, crap, where you get to go out and for a week or whatever and just chill and relax and not be on duty or anything like that.
Leave or something.
Yeah, leave. Yeah. You're probably going to want to spend some money on yourself and enjoy yourself during that time. I get it. But while you're in the military and, you've got a lot of things, I assume food's covered and housing's covered, that kind of stuff. So you don't really have, I mean, assuming you don't have very much expenses, then putting money towards a Roth, even if you don't max it out, you could easily be in the position by age 50 to completely retire and never have to do anything again. And if you're in the military for 20 years, you're gonna have that pension hitting you in the face too. So um, there's a lot of things to think about. How old are you?
27.
So you have a lot of time left, and I assume you've been in the military since you were 18, 21.
Yeah.
Okay, so but another 10 years you'll be getting pension, and then you know I mean, that's 20. You'll be in 20 years roughly, give or take some few years. I'm not totally sure on the exact number, but you could do that. Go chill, trade all day, and if you've been putting money towards a Roth for the next 10 to 15 years, you saw the spreadsheet. A 30% annualized return for 15 years is what is it 3 million? Oh, I got the spreadsheet here. For 15 years, you're looking at 1.7 million in 15 years, right? And if you're 37, or rather 42 in 15 years, add another 8, right? Another 8 years, you're looking at $10.8 million. And it's doing exactly what I was saying: limit entry orders, limit exit orders, and just chilling. You know what I mean? Like I've made 97% return this year on my total account doing this strategy, shares only. Like my Roth accounts, I don't trade options. I mean, I do cash secured puts, but those are going to get me around $50 to $200 every month and to month and a half. Whereas the shares, I'm going to see probably that much in a half a month to a month if I do it right. So just a lot to think about. If you're interested
Yeah,
in,
I'll have to hit you up privately for more of that, if you don't mind.
sure. I was just going to say that if you're interested in buying options, and scalping and short-term stuff, it's a lot more risky, but it can also be a lot more reward if you get the right thing. So um, Tilio's a boss in that realm.
Yeah, you guys, well, first day in here, but it seems like you know what you're talking about. So I'm joining already and look forward to doing some trading with you guys.
Awesome.
I appreciate it. We'll see you on the next video call. You said you do this every Tuesday and Thursday?
Every Thursday and Sunday.
Thursday and Sunday. Okay.
Yep.
Okay, thank you.
You're welcome. Okay. Who's next?
Hey, I had another question.
Okay.
It's about a penny stock, SHMP. It's I just had a question, like, when do options start becoming a thing for a stock that's so low?
What was it again? Foxtrot, Henry.
SHMP.
Oh, SHMP.
Yes. Yeah, like shrimp.
Okay. SH.
MP.
Okay, sorry. SHMP. Hmm.
Yeah, it's because it's like it's going good right now. So I figure like $1's coming soon. But when you go on like TD Ameritrade, they don't have that section for options.
Yeah, so this is probably not going to have options for a long time, if ever. There's some tickers out there. It doesn't matter what price they are. They don't have options. Like Siemens, they don't have options, and the price is at 70 some dollars. So it depends on the company if they want to offer options.
Okay, got it.
But I think they
That
have
makes
to
sense.
at least be, $2 or $3, or at least over $1. I mean, I know I've seen some stuff that was at 90 cents that did options, but it was at $30 before COVID. So it already had options in place.
Yeah, because I was just asking because I was in another stock that was a dollar option and it was at 50 cents. So I figured that this one would have done something around the same, around that price.
Yeah, no, I mean, like I said, it really all depends on the company themselves if they want to offer options or not. Because, when a company goes into the option realm, they're allowing their company to be shorted a lot more than just shares. So with shares, you can short and you can go long. With options, there's multiple ways of shorting and going long, right? So it increases the derivatives of their company's shares in the sense that they don't. It's fantasy shares out there basically. You increase the derivative amount, it becomes fantasy. It's like, inflating the US dollar, by just typing a number into the
Okay.
bank system. So, yeah,
All right. Thank you.
you're welcome. Okay, who else?
How do you normally find your put together your daily watch list?
So I have a watch list that I've been playing the same tickers for years. Every once in a while, I might add something, but generally, I I stick to the same list, and I don't normally. How do I say it? So if you look on my screen here, I've got a list of probably 30, maybe. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, maybe 50. And out of these 50, I will probably trade 2 to 5 of them a month. Um, I know that some of the day traders, they trade the same things over and over. I've seen it often. So it's more along the lines of what have you watched religiously? What are you comfortable trading? What what ticker do you know the price action of? With if you close your eyes, what do you know where support is? Do you know resistance is? If you just close your eyes and somebody says, "Where's Moderna's stock price resistance at?" You know, if you can tell somebody that without looking at the price chart or the chart itself, then that's something you should probably trade more often than not, right? Whereas if somebody asked me, well, where's support of Disney, and I'd have to go look at the chart, that's not something that I'm necessarily interested in trading. I might add it to my list and just keep an eye on it for a little while. I like when I add things to my list, I like to watch it for at least a month or two to see what it does when it hits its high, what it does when it hits its low, and everything in between, so that I can familiarize myself with the movement of the stock. Right. Now there are ways to find new stocks. There's a scanner on Thinkorswim. There's scanners on Finviz. Um, and Thinkorswim is what do you call it? Completely damn short for words tonight. You can change it to whatever you want specifically. Whereas like Finviz, it's already set up and it just kind of pops up. Um, if you're looking for something that's overbought or oversold with RSI or MACD crossover, or I've got standard deviation channels and I have a scanner built off of those. I was going to look at using building scanners based off of chart patterns. So there's a lot of things you can do. The Thinkorswim scanner is pretty awesome, and it's free. And there's scanners out there that are probably a little bit better, but you got to pay for them. So that's a suggestion. You can look at stocks based off of price. You can look at stocks based off of implied volatility, or just a number of things. Lows and highs, 52-week lows and highs, average price. You can look at small caps, medium caps, large caps. You can even look at the Russell 1000, 2, 3, 4, 5,000 index. You could look at the SPY. You could look at the Dow. There's just a lot of ways to go out there and find something. I would recommend, though, don't invest or put your time into a company that is trash or that you've never heard of. Somebody that's not a big player in the world market. You want a company they have established themselves in the world to exist for a while. Those are the companies you want to mess around with. You don't want to play with new companies that just came into the market necessarily. Um, like Airbnb, it's new in the market, but it's been around in the actual consumer market for a little while now. So that one you could potentially play sooner rather than later. Whereas something that's a penny stock or something that just enters as an IPO, but no one's ever heard of it and nobody knows what they do, I'd stay away from stuff like that. So that's a pretty generalized answer, but I think you could probably get something out of it.
Yes, sir. Thank you.
You're welcome. Okay, who's next? I'm probably going to end this at midnight tonight, which is 45 minutes away. So just in case.
Yes, I have a question.
Okay.
Yeah, I wanted to see what your opinion was on IDnomics. The abbreviation is IDX. Or IDEX, my bad.
Okay. Well, it looks like it hit a low and then just ripped. But it looks like it's having trouble at resistance. 208 area. Maybe look for a get a little bit closer. So maybe look for 50% retracement on this, which would
Gotcha.
be $1.88.
Mm-hmm.
And if it starts to lose selling pressure and starts to gain buyer pressure, that's a very, very good indicator that you're going to see it continue upward. But this broke multiple levels of resistance. 1, 2, 3, 4 levels of resistance all in one day. That's huge. But it is hitting resistance right here.
Yeah.
So I think you're going to see it potentially reverse down here somewhere 38 to 50% level. If it goes below 50%, I'd be a little nervous to get into it until it comes back down here somewhere.
Gotcha. And I also have another question.
Okay.
For another stock, it's ICLN. Yeah, ICLN for the abbreviation for that one.
Oh, iShares.
Yeah.
So that's just kind of like putting your money into something and it slowly go up.
Okay.
iShares is like I forget how someone explained it to me, but it's basically like a certificate of deposit in the stock market.
Okay. Got you.
It always goes up. Obviously, COVID is going to be a drastic change in that, but if you look at it's one of those that just has a consistent trend, right?
Yeah.
And this is something that so if SPY or the entire market as a whole is in one direction, I think this is going to follow it.
Got you. So that's kind of like a more of a long-term trade.
Yeah, or you could I might consider doing cash secured puts on this when it comes back down. Problem is it's going to lose value. Yeah, I mean, this is one of those where, I mean, you see it from COVID low all the way until we're at. It's just been going up.
Yeah.
So, like I said, it's just it's think of it as a certificate of deposit in the stock market.
Okay. Got you.
I've seen another ticker. You're welcome. I've seen another ticker that was iShares that had a different ticker symbol. I can't remember what it was.
Gotcha.
Let's see if I can find it.
You know what, Rick? I guess in a way, maybe. Already lost interest. Get in the car. I've been inside a kid all day. Now I can feel my bones scraping each other. Just so you're prepared, there's a bunch of dummies in the garage. Huh. Sounds like our stories were connected.
Sorry about that. Let's see if I
Yeah, I
can.
got.
Okay, well, just give me 1 second. Let me see if I can quickly find this. Oh yeah, there's a bunch. Yeah, there's quite a few actually. Hmm. Okay, so I'm incorrect on this particular one. This isn't what I was thinking it was. This one looks like for energy. It's an ETF for energy.
Mm-hmm.
So ICLN clean energy. Let's see if I can hold it. See if I can find. So you could. So iShares, it looks like it's a bunch of ETFs and funds. So if you go
Mm-hmm.
to, on your free time, go to iShares.com. It should show you all of the ETFs. But this particular one, I'm trying to see what holdings it has. It's not really showing me though. I have to do some deeper. Oh, here we go. Plug, Enphase, Meridian, Verbund, Vestas Wind, Siemens Renewable, Zinyi Solar, Contact Energy, First Solar. Looks like it has 2, 3, 4, 5, 6, 7, 8, 9, 10, 50. Wait,
Gotcha.
yeah, it's got 50 tickers inside of it. Ooh.
Gotcha.
One more thing. iShares Cash ETF is, I think, the one I was looking. Ticker symbol. I'm not sure. I know there's one where it just, I think it's like a treasury bond or something like that, but it's
Mm-hmm.
called iShares. But it's for like treasury bonds and yields, stuff like
Yeah.
that. And
Gotcha.
that's the one I was thinking about before, where it just has like just a straight uptrend the whole
Mm-hmm.
time. And it's one of those that it constantly pays returns. I'll see if I can find it later on. I don't
Yeah.
want to take up too much time, but I remember seeing it somewhere. Let me, matter of fact, I'm interested in that because actually had a few people asking about something similar to that. Shares cash. I will look into that and see if I can find something further on that particular issue. Okay, and that was GM. Was that you that was asking?
Yeah.
Okay. All right, I'll see if I can find something on that. Was that it? Do you have anything else that you wanted to ask before I move to the next person?
No. Yeah, that's it. Appreciate it.
All right, you're welcome. All right, was it Clean McDean?
Yeah, man. I was once again. Thanks again, brother. I see on all the charts you pull up, your lines are the same. What are those lines? Are those indicator lines, right?
This is standard deviation channels.
Okay. How do you get those on there? So that's Thinkorswim, that platform you're using?
Correct.
Okay. That's what I thought. All right. And that's an option that they have on that platform, particularly to have those up there.
Yeah, this is an indicator on Thinkorswim specifically. Matter of fact, if you go to my channel, this one, I just at you on the channel. If you go to my pinned messages, you will see um, standard deviation channel explanation and a scanner that goes with it. So the scanner is on
Cool.
date of 12/6, and the standard deviation channel video that explains what they are is on 11/30.
All right. Or is
Those
there
are
are they they're just consistent on all your charts? I noticed that's pretty cool. So thanks for letting me know about that.
yeah, they're really awesome. They're not a silver bullet, but they definitely can help to make a difference in looking at how extreme of a level the stock is, right? Like Apple right now is at fair value on the 180 chart. But if I go to a 5-day, 15-minute, it's actually undervalued, right? Let's see, let's take a look at Tesla since that one's pretty wild. Um, it's slightly overvalued, one deviation channel above fair on the 5-day, 15-minute, but I look at the 180 and it's pretty consistent. So that's what I like to see on standard deviation is consistency across multiple time frames. I look at the 30, yep, it's near fair.
A lot of sense.
60
And those
is
you put those numbers in yourself to get that output, or you just click standard deviation, all those lines just popped up automatically.
no, there's a little bit of configuration there, but
Yeah, okay, I figured. Cool,
yeah, that
cool.
video
Right.
really explains it in detail, so you should
Yeah,
be
no,
able to understand it pretty easily, I think.
thank you, man. I appreciate it again.
You're welcome. Okay, who's next?
I have a question.
Okay.
In regards to spreads as opposed to single options, I'm just curious as to how that the spread can go up or down in value if you have two options that are doing basically the opposite thing in regards to their value. Does that make sense?
Yeah, so you're shorting one and you're going long in the other. Now, a credit spread, when you do that, it's basically you're covering a position with a long strike and you're trying to make money off the short one. And the long strike just kind of protects you, whereas the short strike is where the money's at. Um, not really sure how to explain. I'm trying to think. That's a good question.
I guess what I'm asking is where does the price variation come between the buy and the sell option? Is it just because of the strike price?
No, it's the contract price. So whatever the difference between the two contract strike prices. So the strike price itself doesn't necessarily matter. It's the contract price that matters. And whatever the difference is the premium received, right? And whatever the two contracts is total, that's your entire collateral. So let's say, for example, the entire collateral is 500 bucks. The short strike is paying you 250. The long strike is covering basically the 250. So with that being said, if the price goes against your short strike, you start going negative. And the covering of the long strike is going to make sure that if it goes completely in the money or against you, you're not going to lose exponentially. Right? So in this scenario, $500 collateral is what it costs to get into that position, and then they pay you the $250. So the max loss of that position is 250. Does that make sense?
Yes.
Okay.
Thank you.
I wasn't sure if I explained it clear enough because I was potentially confusing myself. All right. I would suggest, if you're interested in option selling, to pay closer attention to the selling premium channel, because that's all we do there in that specific channel. That is.
Why do you prefer selling options as opposed to debit options?
There's less risk, in my opinion. So when you buy options or you debit your account to get into a position, theta is against you. Excuse me. And that erodes the value of your contract. And if you don't see profits relatively quickly, it's just a losing game at that point until it really pumps. Whereas with option selling, when theta decays, it erodes the value of the contract that you sold. So when it's time for you to get out of that position, you have to buy it back. And you basically want to buy it back for less than what you sold it for. That's your profit. So theta is on your side when you sell options. So if you get in at the right price level, you're guaranteed money no matter what. Even if it goes against you in the medium term or at the start, you still have the whole entire contract period, days till expiration, to go back out of the money. Does that make sense? You there? Gains?
Yes, that makes sense.
Okay.
I guess the only objection I would have to that is because it seems that right now, compared to what you would say is more like a normal time for the stock market, it's such a heavy bull market that random pumps in price aren't as rare as I feel like they should be.
Let me think that one for a second. Random pumps in the price aren't as rare as they should be. Okay, so I would blame that on COVID and stimulus, election season, all of those things, right? A normal year in the market, you're going to see more consistency in the stocks. I guess is really it's not going to be wild and crazy volatility normally, if that makes sense. It's a little bit more reserve on how extreme the price pumps on a lot of these tickers. Does that make sense?
Yes.
Okay. Okay. Who else has questions?
Yeah, hostile.
Hey.
Question regarding the cover and the lips call. So, uh, first question is like, are we treating both contracts separately?
Yes.
Okay, so let's say if I enter in the lips call today, it doesn't mean that I have to enter in the calendar spread at the same time. I can enter maybe tomorrow or the day after tomorrow.
Correct.
And
The idea is to.
is it a good idea?
Sorry, I was going to say the idea is to enter the leap when the price is low or is falling, and then once it starts coming back up and it hits a resistance point, that's when you sell the call against it with the short term
Got it.
front month.
Okay. So okay, sounds good. So when it's support, I would enter in the leaps. When um at the resistance, then it's good to enter in the spread calendar.
Yeah, you would sell the call against it, thus turning it into a calendar.
Okay. So like I have a question, is that a good idea to average down on the sell call on the calendar?
I would so if you want to continue to make it a calendar When you average down, at some point you need to sell a call against it. Does that make sense?
Yes. So, like, is it a good idea to, let it expire worthless and have another calendar spread for the next month?
Yeah, so you want the front month contract to expire worthless. 100% you want that. And then, sell the next contract for the next month. And ideally, what you want to see is a huge pump. And so let's say you get a 30-day, you're selling a call with 30 days till expiration. In the last 5 days, you want to see the stock pump hard. That's when you sell out both positions and close out that leap and re-enter a new leap and just continue repeating the process. So essentially what you want to do is for the first 3 to 6 months with a year plus leap, you want those first 3 to 6 months just to lower the cost of that leap by itself. And then at some point after that, you want that leap to show big profits or at least 100% return, right? And then that's when you exit everything together. But you don't want it to happen as soon as you sell the call against it because it's gonna drastically affect your profits because that front month contract that you sell, that one's gonna be, you need theta to decay that or erode that contract before it becomes valuable to you, right? So if there's no erosion happening and the leap pumps, it's going to take away from the profits with that front month contract. Does that make sense? So you want your front month contract to have decayed in value substantially, and then you want the leap option to go up drastically in value. So if you're still holding both by the last week or two, the last 14 days, then you should totally see big profits on the leap and potentially still a little bit of profit on the short position. If that makes sense.
That's making me a little confused.
Okay, let me see if I can try again. So a 12-month leap, you pay $500 for. You've got,
okay,
let's say that's January 2022 or December 18th of next year, and you just sold a front month contract this month against that, right? And you take in a $50 premium. That lowers your leap overall average cost to $450, right? So it's going to cover your theta decay on that and potentially give you $25 or $20 in profit. Okay, and you want that to expire worthless. Then the next month, you do the same thing, and it lowers your average cost to 400, right? And you keep doing that until say, let's see, 450, 400, 350, 300. So let's say you're in December, January, February, March. End of March, you've sold calls against this thing 4 times, taking in $50 of premium each time. Now the value of your leap is worth $300 to you instead of 500 what you paid because you took in that premium of $200 in the past 4 months, right? You follow me so far?
Mm-hmm.
Okay,
Yes,
so
yes, got it.
by the end of the expiration in March, let's say you get a week or two left, that contract has eroded in value from 50 to say $15 or $20. But that leap, let's say the price has hit your strike. So let's say your strike is $30 and the price has come up to 29, right? That contract, the short front month contract, is probably going to be worth $45. So you're gonna have to pay $45 to get out and still make $5. But your leap, it's probably going to be worth 500 or 600, right? So you take in basically you take in the $200 that whole time, and your contract's worth $300. And now the leap, when the value of the stock price pumps and it doubles, right? Now you've basically taken in the $200 plus you make another 300. So if it goes to $600 of that leap contract, you've taken in 200 plus you make 300 off of that leap. So your profit's 500 bucks. Does that make sense?
Yes. Okay. Okay. I got it now.
Okay.
I was thinking, like I got a leap today and didn't do the sell front month, and when he hit the resistance, I sold my leap, sold my leap and entered in the cover, but that doesn't consider as a covered leap.
No, you're actually in a naked position now.
Yes.
That's
Yes.
dangerous.
Got it. Okay. Yeah. So it's basically it's a for me as a beginner, it's a good to enter both at the same time to finding the support and enter um, in the both. I mean, at the same time would be the nice idea, right?
Um, I would say always be in the leap first. That way, when you do get into the short position, it's not a naked, unlimited loss position. So
Okay.
buy the protection first and then sell the positions against it. That way, you're always
Uh,
covered if it goes up, right? Because that leap covers your short position. And as I was saying before, if it's expired or if it's decayed for a little while, that short position, and then it pumps to your strike of the leap, you're going to see big gains on the leap and potentially still a little bit of gain on that short position. Right? That's what you're really after, is to see the big gain on the leap, and until you get to that big gain, you want to see you want to erode the contract value of that leap with short positions,
okay.
right?
Makes sense.
Okay.
Um, yeah. If somebody has question, go ahead. I would ask later. I would wait.
Okay.
I have a question.
Okay.
It's regarding trying to. I'm trying to do what you're doing, hostile, which is swing trading with shares. I tried on a couple of stocks and it worked, but I don't think I just wanted to check if I was following your criteria. I don't know if I should ask you this right now. I should ask you at the end because I had like 12 stocks I wanted to ask to see if it would be a good swing entry.
You might as well.
All right. I had well, the first one I tried was UNFI. It dipped because I forgot why it dipped specifically, but um, it was a really strong support at the 14-15 level, and I decided to swing it. It dipped because of earnings,
Okay.
so I played that, and I saw that the support was strong, so that's why I decided to play that. What do you think?
Yeah.
I'm not seeing the same
I would
thing on
agree.
you. Oh, I am actually. Wow, I don't know. Our charts look different, sort of.
Well,
Never mind.
I'm
Whatever.
using Heikin-Ashi candles, not regular candles, so that might be why you're seeing something different.
Is that our Haikanashi? What do Haikanashis do?
It just shows trend direction. So the
Oh wait,
candles
yeah, that's really
themselves,
nice.
they show trend. They're still candles. You still read them the same, but they in that particular period of that candle, it averages, and whatever the average is better, it goes that direction in color.
Oh, okay, interesting. So it's better, easier to read trends, so it's better for this long-term trading. It's easier to read charts like this.
For me, yes.
Okay.
But
Okay, and then
I
the
agree with your support level 100%.
this was a good play, right? It was a worthy entry.
Yeah, and did you get out at 16 plus?
I pulled out when I saw the first candlestick on the intraday. I just flipped over, and it was a really big candlestick. and I decided to just take profits from there. I don't really have a specific exit point. I just take profits when I see it, like
I
a
mean,
decent profit.
that's not a bad idea, and you're going to recycle your money a lot faster. And if you find multiple things to get into when you see support levels and it does that, I mean, if you do this 5 times a week, you're going to make more money than you would if you held that position and waited for it to hit resistance.
Yeah, and it might not. It might just pull back and just circle around and stall or something
It could
too.
very well do that. Yep.
Oh wait, next stock I had was CSIQ.
Aha. That's one of my favorites.
Yeah, I like it too. Canadian Solar. Honestly,
Right.
this one was just like a impulse. I wanted to swing it. Well, I did. Um, it didn't hit the exact support. Let me take a look on my screen. 1 second. Yeah, it didn't hit my support, but I saw it going up, so I was like, okay, I might as well just play it and enter a little early. And I was down for like the first day or two, but then I saw it going up, and I cashed out profits at like 42, and I made $33 out of a $500 investment. I think honestly,
Okay.
that's not a lot,
Well, I
but
mean, hold on. 33 out of 500.
I'm not sure if I
That's a
entered 500
6%
or
return.
250. I'm not too sure if I entered on $500 or 250, but yeah,
Well,
I
250
have
is
the
going
right
to be
idea.
12.5%. 500 is 6.6%.
Yeah, that's a pretty big deal.
I mean, that's a great return. I mean, I always say 5% off each position at least to meet that 30% number throughout the year, right? So
Yeah,
if your account's $5,000 and you're doing $500 each time, right? And let's see, you do that 10 times, you've met your goal. If you
10
do,
times
yeah,
a
if you do
month.
that 10 times a month, you've met your goal. And if you do that 10 times a week, think about that for a second. That's a huge return
Yeah.
if you do that weekly.
Hmm.
I mean, again, if you can do that monthly, you're in that. Did you download that spreadsheet I
The
posted?
Roth. Yeah, I did.
If you do that every month, you're looking at the left side of that analysis, not the right side. You're looking at the monthly returns, not the yearly. So
Oh,
your gains will be exponentially huge if you continue to follow that type of um,
yeah.
recycling of your money.
Yeah. I'm gonna be doing this for paper for 6 months until I turn 18 to see if I'm ready for this to actually take this on. But right now, I'm just like, you know, going about it.
Solid idea.
Yeah. So, what do you think about my C6 swing or CSIQ?
You bought it right here at 37.
I didn't buy at the exact support. I bought it a little bit above,
Okay. I
and
mean,
then it went down. And then yeah, I was like, okay,
I think it's
I doubt it's gonna break it.
I think it's okay. Um, uh, the first one was great. This one, it, it's kind of got like an uptrend, right? You see that?
Yeah,
So
yeah, I saw that. That's why I wanted to play it.
it's not a bad idea, right? I mean, I would probably look for something like that, right? So I would think it's going to pump a little bit more and then come back down, maybe touch that line again. This might be a trend support type of play, right?
Yeah. So just play the support when it hits the support sloping up the upward
The trend line.
force. Yeah, yeah.
That's slightly dangerous. So if you do this 3 or 4 times, I'd probably stop doing it
Okay,
and
so I
move on.
shouldn't play sloping supports, right?
You
Or just
can just at some point they're gonna stop.
all right.
That's all I'm saying. You can play them. Just if you
Okay,
do it 3 or 4 times, at some point it's gonna go against you. You get
all
what I'm
right.
saying?
Sloping support. Okay. Well, I want to have like a very high win rate, so I probably like listen to your advice and not play sloping support now.
Okay. Well, I mean,
I just want consistent. I don't want to lose.
yeah, I mean that last one you showed me, that one I totally 100% that was a
That
good
was
trade.
UNFI. Yeah. Yeah, that one's a solid play. And then I was just asking. I had another stock. Well, it's not at the level, but I was asking if you would swing Adobe at 443. Let me take a look.
44.83. No, I would not. I
Why
would
not?
wait till Adobe comes down to at least 455. I'd be really happy at 445. But I'd start entering at 455 and average down at 445 and then 430.
Okay, so you'd enter at the 460 level. It's around there, right? Or 455. Does it matter, or the $5 difference?
It does. I would honestly say in between 455 and 450. It's a good place to start.
I don't understand why it's that specific number. Is it because that's where the biggest dip was, at the body of the biggest dip?
No, that's because it's got 1, 2, 3, 4 areas that support that spot.
What chart are you on?
180 4 hour.
Oh, 180. Okay, so I was looking at the 1 day, 1 year. Okay, yeah, now I see a different picture. So 450, right? 450
Around
mark.
that, yeah. I mean, honestly, the 1 day, 1 year, it's still kind of the same.
Yeah, true.
I'm still seeing that same thing. But that's why I said starting
Can
at
you send me the picture?
455 picture.
455. Yeah, can you send me a picture of your chart, because your screen share is blurry, and I wouldn't have actually chose to play it at that level. Well, I'm not sure if I would have, but I can't see
All
it.
right, hold on.
Thanks. Can you just send it in lobby, all right,
Sure.
or something? Thanks. All right. I don't want to like other people have questions. I'll just wait until the end of lecture and keep asking. All right.
Hold on a second. Might as well ask the rest because I was planning on ending this around midnight. I know Johan wanted to ask more, but my goal is to end at midnight, but I'll keep answering questions as they come. But if anybody, if people run out of questions, it's probably going to be the end of the night for me. But I'm going to send you this real quick, so hold on 1 second.
So you're going to sleep after this? After the picture?
No.
All right. Yeah, I just really want to implement this and start getting on with it when I turn 18. So I guess the rush for me is not rush, but like the hustle. It's just to get this strategy down.
All right, what's your next ticker?
Okay, my next ticker is uh well, honestly, a lot of the stocks I was just asking you what levels you would play them, because I don't really identify the levels or solid entries as well as you, which is what I realized. Okay, but Intel. I saw Intel was
I wouldn't
approaching the.
touch it. Just cross that one off your list.
Why not?
It's having trouble. I wouldn't touch Intel.
So what makes you stay away? Because I need to know so I can like figure out when to stay away or not.
They've had a lot of businesses cancel their contracts with Intel. They're just losing
Okay,
market share.
so I should be researching the fundamentals of this, right? Because I saw that it was a negative catalyst that
Well, not
um
necessarily, because you're swinging it pretty quickly, or at least that's the goal.
yeah.
But certain tickers or certain companies are just in bad positions, so you have to be aware of, just gonna get a general idea of if the company's in a bad position or not. That's what you need to know. You
I
don't
mean,
need to know too deeply the fundamentals.
if it's a bad position, I mean, yeah, I saw the news about something canceling their CPUs. I think it was Microsoft or something.
It was, yeah.
But it is approaching. I think it was approaching the like 3 year resistance though. I mean support. So you still would just stay away because of the fundamentals, right?
Yeah, I mean, I don't like them. I don't like them at all. I mean, it does. You can see here on my chart. I've identified multiple levels where it bounced off of this bottom support level of $43.30. But the trend on this is disgusting, and I don't like to get into stuff that's doing this. You know what I mean? Like that's see what it does when it comes back down to the support level, right? Because if they've had so what I think is going to happen with Intel is they're going to have earnings again, and it's going to be bad. It's going to come back down to the support level, and if it breaches that support level, then we're looking at some dangerous stuff here for Intel because then it's going to be down to um, sorry, let's see, 30 mid to low 30 range, and you
Mm-hmm.
don't want to be in that position when it happens.
Okay.
Right. So if they have earnings, so earnings will be coming out the 21st. If their earnings are bad, wait for them to fall. Wait for them to hit support. See what they do at this first support level. If they if it finds strength, then I'd start with a small position, 250, 500 maybe. If it breaches that support, then you're looking at 30 some dollars. And you do not want to be in that position when it's fallen down to 30 because there goes 20% of that value of that position. Right? And this thing is in a downtrend. So I would
So that's
be
why you want to play, right? It's in a downtrend.
what's in a down like I like downtrends, but I don't like Intel's downtrend
Okay.
because the company's suffering. And they've been suffering for months. And they've bounced off of that resistance or support level a few times now in this 1 year alone. Typically, I mean, I guess back in 2017, 18, sorry, 2018 they did it a few times, but the price is also a lot closer to it most of the year. Um, I don't know. I mean, I don't think Intel goes out of business. I just think that they're going to continue to bleed for a little while, and you don't want to be in that stock if it continues bleeding. I like it under the $30 area. I like it at its what's this 5 year low.
Yeah.
I'm interested in it when it hits $28. Then I'll be interested in Intel again.
Okay. I see. So you don't like it because the fundamentals are bad and it bounced off the support too much this year, right?
Well, I don't like it for the fundamentals, number one, and number two, how big of the waves of the drops. I mean, look at this; it's huge, and I expect the same thing to happen here. I mean, look at the eerily consistency of these drops and how this right here looks almost the same, except this time it happened because Microsoft dropped them. Right? They've been
Yeah.
dropped by multiple big companies. That's bad.
Yeah.
So this is going to keep dying.
Okay. I need to. I also need. Oh, can you zoom out and send me another picture, please? I'm gonna study this after, and I don't want to.
Which
I'm
time frame are you talking about?
just the one where you found all those points where it was bouncing off of support. So you don't care how many times it bounced off of support, right?
I mean, I like multiple support areas like that. Don't get me wrong, but the fundamentals on this is terrible.
Okay. The only thing I think I need to be better researching fundamentally because I mean I didn't really know how to look into this very much. I only looked at like the news and I found out MSFT dropped them, and that was all I looked at, I guess. So I guess I should just work on that too.
It'd
Fundamental.
be an important thing to pay attention to with shares, especially because all you're interested in is buying at support. That's it. So
Yeah,
if
that's true.
you get into a company with bad fundamentals, that's a bad strategy to be doing. You should be looking at shorting it at that point.
All right. Um, a lot of my other questions were relating into like just what levels you would play them at,
We can
and
go through it real quick. Give it to me.
all right, AMD at 74.6. I mean, now that you've actually drawn out levels, I don't know if I think I should just look at it myself and go figure it out myself. But okay, I mean, I'll take it.
You're close on the AMD one. Yeah, I would play that.
AMD.
Yeah,
Wait,
mine's drawn out at 74.25.
all right, okay, it's close enough. Close enough. So you would play it right when it hits it, or would you start entering small positions when it's approaching it?
I would probably start somewhere at 75, 75.50. I'd probably grab 2 or 3 shares. 75, grab 2 or 3, and then when it hits this support level of 74.25, I'd so let's say I go with $2,000, right? I would probably grab. I'd probably throw $200 at it each level, and then by the time it hits that good support level, I'd probably go in pretty heavy, 1,000, 1,200, and see what it does. If it keeps dropping, keep throwing money at it until I've maxed out that total position size that I was looking to enter in total, which is the 2,000 number. So I'd say 200, 200, then do a max of 1,200, and then if it keeps dropping, throw 200 every time it drops to say. I mean, I don't see AMD coming back down to 67. It might. It might. Don't get me wrong. It might, but I don't see it happening. I think it stays pretty strong at 74 and a quarter.
74. I think looking at my chart, I would enter in at 77.6. I would take a position around there. I mean, it could like what is it called? It doesn't have to touch the support, right? So I would want to like enter in earlier, or would that be too early in your opinion?
Not really. I mean, it's an okay area, but it's in the direction of the uptrend. You want to get strong support is a downtrend area, and it reverses it. The 70 four and a
77.8
74 and a
or
quarter area is downtrend reversal. Downtrend reversal. The point you're talking about is uptrend retracement uptrend.
oh, okay. Okay, so you're saying I would be entering it too early because there would be a chance I wouldn't be playing the actual reversal. I would just be playing like a short run up, right? Or trying to play a short run up.
You're playing off weak support, is all I'm saying.
A weak support. Okay. All right. And then I had another question on uh, Microsoft at the 201.
Yeah.
It's good.
Yep.
All right. Adobe. Wait. I already said Adobe. Crowd at the 154.
What is it?
CRWD. It's a cybersecurity stock, I think.
154.
154. Let me take a look.
I don't see anything at 154. I see. I mean that resistance level. That's a resistance level, but
Yeah.
that could be used as support at some point. I mean, there is good resistance points off of that. Anytime stock's above resistance, it can use that level as support sometimes. So maybe I
So
would
I shouldn't.
I would say maybe wait for it to hit there and then see what it does. If it keeps dropping, then it's not a good place to get into.
Okay. So I would. So you would. So for this one, you'd be like maybe. What about 123 level here? 123.67.
That's a lot stronger. I would
Okay.
probably start my position at 128, 129.
And then you would finish your position once it hits what level?
Well, as it keeps going down. You never want to try to wait until it hits support because it probably won't. A lot of times stocks don't always come back down to support. You got to get them before they go to support. But the risk there is you got to go in light because if it hits support and goes through it, now you got to start adding to that position to average down. So that's why I recommend no one ever go in heavy initially, go in light unless it's super strong support. So unless this hits, your 123 area, I wouldn't go in heavy. If it hits 123 and you go in heavy and then it drops down to 96, I would double up. So I would say if you did 1,000 here, I'd throw another 1,000 here, maybe 1,500 at that point.
96. So you'd basically, so you're okay. 96.
So you need a decent amount of capital to do this, especially with higher price stocks.
It's 5,000. Yeah, I think I would just avoid this in general because I would be playing with like a $3,000 account most likely.
Yeah,
That's it's doable, right? If I have like $1,000 or $3,000 account somewhere around there.
yeah, you're just not going to be able to play these high price stocks.
All right, so I'd be going for lower ones. Okay. Okay, I'll just ask one more because this is kind of like the same thing. I think I just need more experience just looking at this and just coming to more lectures, I guess. I don't know. FSLR at the 80 level.
I mean, it's a support level. I would say that 60 is way, way, way stronger.
60.75. True.
So I mean,
What?
higher up here at $80 level, I mean, that's not far from 93 to be honest, if you really think about it.
Yeah, that's true.
So I think that level is not going to be. I mean, there's gonna be some support there. Don't get me wrong, but if this comes down and it has a reason to come down, this isn't gonna stop it.
Okay, that's true. Good point. All right. Okay. Well, I mean, I think my goal for this week. What do you think it should be? Do you think I should just find some tickers, figure out some entries?
I think you
And
should
then
concentrate on stuff that you can actually trade once you open your account.
focus on cheap ones, right?
Focus on things that you can trade. Not necessarily cheap, but just stuff that you can get into. I mean, with $3,000, you got two positions, right? You're gonna have to go in heavy, and pick home runs only when you first start out.
Yeah.
And then once you build your account to say 10 grand, then you can start doing say maybe 4 or 5 different tickers, and you have room to average down for all of them. So you do like $1,000 per position, you got $1,000 to average down with.
Okay. All right. Okay. I don't know. There's like so many questions I want to ask, but I don't really know what to ask. I think I just have to trade and figure out some things I want to trade.
Just keep practicing, and
all right,
you know you might answer your own questions. To be honest with you, but I mean that's what these lectures and live Q&As are for, right? So
yeah. All right, thanks, Hostile. I'll figure this out.
You're welcome. Okay, does anybody else have any questions before I move to Johan again?
Yeah, I have a question.
Okay.
What do you think about fuel cell energy? FCEL.
So they do hydrogen fuel cells, right?
I'm honestly not really sure.
I'm pretty sure they do that. If it is that, I would say this is more hype than anything because there is no infrastructure whatsoever for hydrogen. As far as the
It
stock,
says molten carbonite fuel.
I don't know. It sounds like it could be hydrogen. I mean, hydrogen uses fuel cells.
Hydrogen base. Yeah.
Yeah, so I mean, do you know of any places where you live where there's hydrogen fuel to refill a car with?
No.
I don't either.
No. Okay. Yeah, because I got in like last week just doing normal stocks, and I'm like, plus $100 on profit. So I should probably just cash in on that.
I probably would. I mean, you could set a trail and stop loss. So set it at, say, you're literally at $100 right now in profit, or is there a little bit more
Yeah,
on top of that? So maybe
105.
set a trail and stop loss to where you lose maybe 20 or $25, right? And then if the price keeps pumping, so does your trail and stop loss. So you'll only ever lose $25. You know what I mean? So that way you're guaranteed to lock in profits. And if it continues to pump, which it could be, I mean, I see somewhat of an uptrend from its recent big drop, then a trail and stop could prove to be valuable in this scenario. You can basically bleed that position dry of profits up to a certain point, right? Up until it starts reversing. Then when it starts reversing, it's going to exit your position automatically. That's my recommendation.
Question one more. So Rolls Royce. I want to know what you think about it because I know it's been low for a while because of the pandemic.
What's the ticker?
And I'm wondering if you think once it's RYCE. Let me look. Yeah, RYCEY. That's it.
Oh wow. So that support. Let's see how far back this. I don't know, man. That's been downtrending since 2014. To be honest. I mean, it could be, if you're gonna play that, I would play with very little money and 162 bucks, or 100 shares, basically. Like I wouldn't. I mean, it could be the bottom. So I'm looking at the MACD here. It's starting to close gaps. The true momentum here has changed colors to green, looks like, and it's bottomed out on that chart. So let me take a look here at. Okay, so this first wave and then its retracement, that was a 50% retracement from that. So then we can look here. I would go in light if you're going to play this. There is potential for it to bounce, but I mean, Rolls-Royce does two things. They make cars and airplane engines. That's it. And think about that for a second. Airplane engines.
Yeah, because one of my I'm kind of new to stocks, but one of my buddies was saying to put money into it. So I have 480 shares. The average cost of $1.76. So you don't. I mean, do you think that it wouldn't be too much for it to be able to go up to like $3, maybe eventually, or do you think it's kind of risky?
Well, yeah, I mean, it has potential to go up to $3. I mean, I don't think it'll go out of business. And Rolls-Royce is. Here's the thing: if it goes under $1, it gets removed from the stock exchange and becomes an OTC ticker, which is over the counter, which basically means that it's not on the main world market anymore. So there is that risk, and that's what's really going to turn it into a penny stock. But the other risk here is that they do a reverse split, and they typically do reverse splits to stay on the stock exchange, and that basically divides your shares into a number, and you get less. You basically own less shares, and the stock price goes up to a number where the value of your stock is still the same, but you hold less shares. Does that make sense?
Yeah.
So there's a couple of risks here, and I mean, it looks like this right here looks like there's definitely some consolidation in these last few days. And it did hit support, so yeah, you could totally see it rip up, especially with the stimulus. Well, stimulus doesn't matter for Rolls-Royce because they're a UK company, so I'd be more inclined to look what's happening with Rolls-Royce in the UK. How's the government supporting them over there? So, but if the airlines get a pump, you might see Rolls-Royce get one. But the amount of shares that are traded here are really, really low, except for the last 2 weeks, which has been bad. But typically, you're seeing less than 1 million a day. And that's not terrible. Don't get me wrong. But if you're seeing stuff under 500,000, then that's not good. That's penny stock territory for sure.
Okay, so I should just be watching that then.
Yeah, I mean, I would probably set limit exit orders. Go ahead and set them. You could easily set a limit exit order for, what's this resistance point here? I'd say somewhere around 225, 2 to 225. That could be a good point. I mean, because you generally want to look at resistance levels. But here's the other thing: is when it touched the support down here below beforehand, I mean, it went up to 3 and change. So I mean, like I said, there is a chance. It's just this huge drop in one day. I don't like that.
Yeah.
That's not something I'm very interested in. To be honest with you.
Yeah, it's pretty risky, I guess, when you look at it that way.
Yeah, I mean, this is why I like to stay away from penny stocks. Anything under $10 is not something I'm really interested in, because they can go from 10 to $1 pretty easy. But if they're at $10, they could go to 30 or 40 pretty easy too. So there's risk and reward.
Okay. So, yeah, I'm new to this. Actually, just joined yesterday and got kind of lucky for the past 2 weeks. I've just used Robinhood, kind of looking at the top movers for the day and like trying to get in early. And there was one stock, WNW. I think that was it.
WNW.
WNW. That had like it had like this huge drop. It was I guess it was just it being on the market, and I almost had $1,500 profit, and but I waited, just learning things, and then I only got around 600. But I wanted to know like how often you see that kind of trend on the graph for like a new company. It kind of shoots up a lot in the beginning, and then
a lot. Here,
so that's common.
Look at Rocket. Look what Rocket did. Ripped and then fell. Look what Airbnb did. Well, they're opposite. They started out high at 165, dropped pretty low, and then they've been building back up. So, um,
Yeah, I have some in them too, so I recognize that.
let's see. Who's another one? There's one other one out there that did, was really. Oh, pins, I think. Let me see if I can find. So pins started out at 22, jumped to 36, and then fell down at its lowest to 22 again. So it starts where it opens at its current price, rips, and then falls back to its current price, or its opening price, I guess you could say. A lot of new stocks do that. One thing I will tell you: do not pay attention to that thing that you mentioned about Robinhood,
Top
where
movers.
yeah,
Yeah.
do
Yeah, for
not pay
sure. Yeah.
attention to that.
I'm already well, I'm kind of more interested in doing the kind of swing trading that you do, so I don't have to be on my phone all the time watching this. I know if I did, my about 10,000 on my portfolio, and I know if I did wanted to do day trades, I would have to do them on like multiple different um, apps to be able to do more than 3 in a week. But um, is there any? So I know you don't have an alert channel, but is there any way to see? Do you like kind of post alerts for swing ones that you think are good, or whose
I do have an alert channel actually.
channel do you think I should follow?
I do have an alert channel. It's called Hostel.
Oh, I see it now. I don't know why I didn't see that before. It's right in front of me. All right, cool. Yeah, because I think it seems like everybody kind of has their own little level area of expertise.
Yeah, I mean, so let's see, where did that? Looks like MMA. Oh, okay. So if you look at the trade section further down low, it says long-term trades. I'm going to be doing
Yeah.
my shares in that channel, regardless if it's a week or a month. That's where I'm going to probably be doing my shares because my current channel, I'm going to turn it into just an option selling channel only, which is going to incorporate another person that we're going to make an analyst. So pay attention to the long-term trades channel. That's where I'll be posting my share swings.
Yeah. Yeah, I was kind of reading a little bit about selling option premiums, and it seems to be safer as far as profit consistency and stuff like that.
Yeah, it definitely is. There's a lot more chance that you don't lose. So, but there are strategies that are safe and there are very risky strategies. So keep that in mind too.
It's true. Well, yeah, thanks a lot. I've been listening to this whole time. It's the first Q&A I've done, but I'm definitely going to be stepping in for more.
Cool, no problem.
Thanks for staying out a little later.
Yeah, of course.
Yo, Hosta, I had one more question actually.
Okay.
The scalability of trading, swing trading like this. Let's just say you start getting to like buying like 40,000 shares for like like a $15 stock. Wouldn't that have problems getting filled, or like because like, or it would just take time to like get the whole what is it called, the whole order filled?
It depends on how many shares get traded per day. You never want to be more than 5% of the total amount of shares that are traded in one day. If you are, then you're going to have to stagger your entries. But in that scenario, I would suggest you go with a higher price stock so that your amount of shares are less than 5% of the total amount traded in one day.
Okay, so hostile. This is what I was curious about because like for your Roth, like you would start running into problems with this, right? You would have to start moving to like more expensive stocks, right?
Yeah, of course. I mean,
And
I'd be doing. I'd probably, once I get to a certain level of value, I'd be doing a lot more cash secured puts, and I'd be doing them on things like Tesla, where it's $40,000 or now 700 or $70,000 per cash secured put, right? So, if I'm doing $50,000 positions, that's a good position for me to try out with cash secured puts. So I'll probably do, you know, 25% of my account as a cash secured put, and then, buy a bunch of stocks with the other 25%. If we're talking, 10, $15 million worth of capital, and I'm putting anywhere from $6 to $8 million in the market at any one time total, my total account value, I'm going to be looking to be in three or so million worth of options, and the choice there is I can buy options and shares. Like I can double, like I can if I do, you know, two cash secured puts of Tesla, I can also buy 200 shares of it, right? Because in the options arena, it's not the same as the share arena, right? It's two different types of orders. So they're not going to conflict with each other. And as long as the option contracts are there, then cash secured puts are extremely viable. So the larger your account gets, the more you should be doing CSPs.
okay, so you wouldn't start running into this problem until like the millions, right?
Yeah, I would say so. Yeah,
Okay,
3 to 5 million.
okay. So I shouldn't even like care about this right now. I should just figure out like
No.
good entries right now. Figure out home run trades.
Well, I mean, listen, having that goal in mind is very credible. Um, so like it's fine to think about that. I mean, that's why I made that spreadsheet, because I think about it too. I think about being in the millions of dollars in my account, right? But realistically, that's a long-term goal. So you got long-term, medium-term, and short-term goals. Your short-term goal should be making it to 10K. Medium
Yep.
term should be making it to 100K, right?
Yep.
So, and then long-term is minimum of 1 million
Hmm.
or 500K, something like that.
Yeah. All right. I think I just need to improve my fundamentals and my technicals, or just figure out like better entries into these stocks, I guess, or like evaluate whether it's good or bad. Because I really haven't like as you've seen, like I've just been giving you support levels. I haven't really evaluated the fundamentals very much,
I mean,
or to
like I said, I don't really look into fundamentals necessarily, but I keep my eyes and ears open for stocks that are having trouble. I mean, I know Intel's in trouble. Right? I mean, like some of these other ones that I trade, like, just read headlines about them is about as far as I go. Like I won't go deeply into it and see who's managing the company, what their um, revenues are, and all that kind of stuff, because I'm not interested in that type of trading. I'm only interested in monthly trading. But if I have to hold something, I need to make sure that whatever I have to hold is going to come back. That's the only thing you need to pay attention to.
all right. Okay, I'll in the during the week, can I just at you in the question bot when I have like a stock I would want you to take a look at?
Yeah, yeah, just add the question bot and then put my name in there.
All right. Okay, thank you.
Welcome. Johan, you want to go now?
Yeah. So when you said Tesla cash put, I was looking at the premium and I was like kind of fall from my chair.
Yeah.
Man, it's like a thousands of money, man.
A
This is
week.
like
It's
ah
1,500 a
oh
week.
yeah, yeah. It's a, man, come on.
Oh yeah,
So
trust me.
yeah, I have I have a I have a question regarding the covered calls for the Neo because I like the Neo for the long term is the kind of the amount of premium they are paying is like kind of the compared to Tesla I would say because Neo stock price is somewhere around 46 right now and if we go for a month they are paying decent like almost $500
Yeah,
premium a month.
yeah, they're really
So
good for sure.
yeah, and having like kind of 400 500 would pay you a couple $1,000 a month at least.
Yes.
Um, so have a question regarding that. So let's say from now I set expiration date on Feb 19, 2021, and strike price is $60, which has $500 premium.
Okay.
So in a month, if it's hit $60 and went even 65, so as soon as it hit my strike price, would sell my shares or
No.
I mean I can wait till my expiration and on the expiration if it's in the money then they will sell my shares.
So the very last day of expiration, they will take your shares away if it's in the money.
Okay.
But now
It's
remember,
not then.
if it's at $61 and you want to keep
Mm-hmm.
those shares, you can probably still exit that position for about $350 return,
Okay.
right? Because you got $490 in premium on that, right? So
Mm-hmm.
that makes your your covered call is basically at 64.90, right? So if that contract's worth $90 on day of expiration or $50 or whatever the number is, and the stock price is at 61, you're gonna see anywhere from 300 to $375 in profit on that position because again your premium hasn't been eroded. It needs to go to 64.90 for you to be for that contract to be in negative, or maybe 64, somewhere around there, right? It just depends on IV, depends on bid ask
Mm-hmm.
spread, depends on how much the contract's currently worth. It could be worth $50, right? Um, let's say it's at 63.50, it could be worth $50. Or let's say it's at 64, it could be worth $25, right? You can still get out of that position if you're interested in holding the shares, right? So, that's one thing to consider with covered calls. You can still exit the position near expiration, even if you're in the money, as long as it's not beyond the premium that was paid to you.
Okay. And if it's a 59 below my strike price, then if I let it expire, it would give me the full premium, right? Whatever I supposed to receive.
It'll be very close. So you'd be in a gray area where there's still some value left in that contract,
Okay.
right? So it might be like $25, it might be 50. It just depends. But if it's
So
at
I don't need
say
to close the position.
no, if it's at
Okay.
say 57, then you should see all premium. So
Mm-hmm.
let's see. Actually, I can probably
Do you remember on Friday, that I posted a picture about I think it was a workhorse cash put that I did, and I was almost 85% in the profit. And at that time, it was out the money, almost to 50 cents. And you recommended me to sell that, I mean, close that position. And that ended up in the money.
Oh, really?
Yeah, so like glad I closed that position and opened the new one. Otherwise, they would have. I mean, I was okay if they assigned shares to me, but just for a $2 or $3 difference, if I can close the position, why would I get the shares?
Yeah. I mean, if you're at 90+% return, take the money. Like, there's no point in risking. a few dollars
Yeah.
for assignment, you know.
Mm-hmm.
So with the Neo play, by expiration, assuming IV remains the same, you'll see full profit somewhere below $54. But at, let's say 59, you'll see 387, right? So it's about $100 difference in value from the premium, right? So when you get, say, see now, as you can tell right here where I'm at, it's $60 strike. So $60.03 in the money, just slightly. You're at $340 almost in profit. It needs to go all the way up here to say, let's see, 60, 64.60 and change above for it to break even. So it'll take your shares, you keep full premium, or you let it expire. Or I'm sorry, you exit the position and keep your shares, but then your premium's gone, right? So in this scenario,
Okay.
if you're at 64, 65 or something, you might as well just let it take your shares, right? But if
Okay.
you're at 60 or 61 or even, under 63, you take the if you want to keep the shares, you exit the position. You're at $150 return at
Okay.
$63, right?
I like Neo
140.
because it's kind of volatile. I might see, profit maybe in a week or two because of that.
Yeah,
And I
yeah,
just close the position and open the new one. Just make the money, and break even price probably would be, after 6 months might be $8 or $10. That's the beauty of cover.
right, right. Yeah, that's exactly, especially if you don't mind owning the shares, I would totally agree with that. And same scenario with, cash puts. It's exactly the same. You could see premiums for this pretty quick, or you could see
Yeah,
returns pretty quick. And, you know, if it rips, take the money off the table because it's going to come back down and you want to get it at support and repeat the process. And the more you can recycle your money, the better for your portfolio.
I know that you are going to do the cash puts at 37. So that high price, I would be like probably all in.
I think I'll
I have
probably
only
do something at
concern
40, to be honest, if it goes back down to there.
40 is not bad for the Neo.
Yeah, I like 40. I really like 37. But,
And the amount of premium they are paying it's a decent. You
oh,
can
yeah.
break even. Yeah.
I mean, you're looking at, shit, I mean, if you did cash puts at the money right now, which is not a good idea, but, let's see, 46. That's almost a 17% return. That's huge. If you take
Yeah.
half of that, you're looking at, 8, 9%, and that's still huge. So let me get closer. Yeah, I mean, I would really like to get in at 40, 41, but 37 is even better for me. I don't know if it's going to come that low, though, to be honest, but we'll see. We'll see what happens. Here's the thing: is with cash puts, man, you have to be patient. Have to find the right moment to get in. You got to find the right price, and then look for 45 plus days out in expiration. I wouldn't go for 30. Premium's not going to be as good. But you kind of weigh out the
Mm,
differences between the two, right? I mean,
yeah.
let's see, 61 days out at the money 770. Um, let's go to this weekly. 40 days out, 580. So I mean, it's $190 difference. And the thing here is like in 4 days, if I did a cash put, it's gonna pay me $154. That's still a really good return for 4 days
Yeah.
of expiration. So
Hmm.
I really like that, man. Neo has hit my radar, and I'm interested now as of lately. I mean, after I saw this movement, this descending triangle or descending wedge, whatever the hell you want to call it, I started becoming interested because I know how
Are you
Neo.
concerned?
Am I what?
Are you concerned about that delisting from the U.S. market?
No,
Okay.
Biden. Assuming Biden is president, which is probably the case, China is going to benefit from Biden. I just totally believe that. So, Trump wants to delist. Biden does not. I guarantee you. He wants to help China. He was the one that said it was Trump was racist when um, he blocked China from allowing their people from coming here, right? And he said he was
Hmm.
racist because of that, and Trump did it because of the virus or whatever. So to me, it's Biden's more interested in identity politics than you know trying to get to the root of the problem in that particular scenario. So and there's a lot of talk about Biden having taken money from the communist government of China, and who knows? Who really knows? Nobody. What I do know is Trump is 100% for America, 100% against China when it comes to the markets. Biden is all for um, what's that trade uh, Trans-Pacific Partnership (TPP). He's all for that, and that benefits China wildly. That puts China at the top of all of the trade deals in that particular pact. So actions speak louder than words in this scenario, right? I believe Biden's actions more than I believe his words, and his actions are he's pro-China. So I don't see them being delisted. Not with Biden. If Trump does it prior to his exit of the presidency, okay, well that could be an issue because then it's hard for them to get back in. It's going to take a lot of red tape to get through. So
Haven't Trump signed the delisting? I think I heard somewhere. I read the news that Trump has signed.
maybe I don't know what that would do to the stock though if it got delisted. I don't know how that would affect people. To be honest with you, that'd be something to research, I guess, and determine.
We'll see. Right now, we will take the premium. So,
Yeah, I'll take the premium. That's right.
cool. I'm done.
Okay,
Thank you.
you're welcome. Does anybody else have any questions?
I got a question.
Okay.
So like basically like I joined for the 500. I didn't. I mean, yeah, I joined for the 500 to 10K challenge, right?
Okay.
And um, so they were saying that it's recommended to use Webull for the cash account, and like I'm just thinking like, should I just and like so like I'm not gonna have a cash account, meaning I could trade like day trade like 3 times a week. So should I just like not do the 10K challenge and just take other trades or like what?
Probably not. Yeah, that's gonna be a lot of day trading and scalping.
Yeah,
So I think you're gonna day one you're gonna be out of trades.
yeah. All right, and like so like the plays that like the traders like do here, like do you like can you like tell me like how much they average around like one contract?
That
Like
varies wildly. It could be $25, $50, 100, 200, 500, 1,000.
all right.
It varies pretty wildly. Um,
Because I'm starting with like 500, so I want to know like how much percent I'm gonna be using. Like, cause like I don't know.
I wouldn't do more than $100 per position because it's such a small number,
Yeah,
and with a small number, it's going to be really hard for you to get into option positions because most of them are going to be 125, 150. You know,
yeah.
I see a lot that are 50 to 75. I see a lot that are 100 to 200. Um,
All right,
I
thank
would
you.
say look at Tilio's channel,
Yeah.
and that should give you an idea of the pricing. He does it all over the board, I would say.
All
So
right, thank you.
you're welcome. Okay. Who else?
Hey, how's those workhorse shares that you have, when are you planning to let it go? Like after they announce the UPS contract, or I mean the USPS contract, or you're gonna hold it after that?
I will probably. I would like to announce that, or I would like to see that contract announced and it rip above its high. And when it does that, that's when I'll be getting out. Assuming I'm not in a covered call. If I'm in a covered call, then uh, I'm probably just gonna have to let it expire at that point and take my shares. But um, I'm hoping to find out roughly when they're going to announce that so that I cannot be in a covered call when it happens.
Okay. If you do, can you post that in your channel? Because I'm kind of doing the same thing.
Yeah, I'll post exiting positions for all of my share stuff for sure.
Right on. Thank you. That's it. That's all I got.
Okay, you're welcome. Okay, who else? All right. Well, I think I'm going to end it for the night. Appreciate everybody joining and asking questions. As always, every Thursday and Sunday, 9 p.m. Eastern, I'll be holding these. So I hope to see you guys on the next one. And if you came late, um, I'll probably have this video or this live Q&A posted sometime tomorrow once it gets completely uploaded to YouTube. All right. Everybody have a good night.
Thank you.
You're welcome.
Thanks.